Holy shit, look what time it is. I don't know whether I just recorded that or not. Oops, I'm terrible. My language. Anyway, hello everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. The Broiler Chicken Show. Back. I think I single-handedly. Hey, there we go. Show. Looks like we're live on YouTube. Hey, there's a couple people over there. Nice to see you. Hope you enjoy the edutainment. You never know with this crazy Beamish guy what's gonna spit out his mouth. But I'll try my best to PMA my way through all this. This is our weekend show. And if anything, what I really like is while the school's in session, just use this as a nice Q&A. And maybe down the road what ends up happening is maybe this turns into something like, just an open Q&A for the world, and like fireside chats. Just ask me anything and I'll just give you my old man, don't take no wooden nickels answer. There's no doubt about it. You can't write better fiction than reality. It's impossible. It just simply is. And I don't think anybody, even 5 years ago, could have imagined the insanity that we're living in right now. So, welcome to the future. I mean, there's so many different funny spins and funny stories that have come out of this experience. I hope you all have a pretty good appreciation now for things like Jupiter-Saturn crosses. And probably, these celestial events to a certain degree probably dictate human behavior, which ends up dictating, sort of fear and greed. And ironically enough, usually during fearful times, actually, you have maybe I think people turn towards sort of more personal experiences, we'll say. And quite often the end results are big baby booms, which in essence drive all this sort of economic cycles that I go on about. So I do find it fascinating. I was tweeting out and all that kind of stuff a while ago. And actually, you know what? While I'm on that topic, why don't we just talk about that for a moment? I would personally like to sort of fade off into the distance, to be perfectly honest with everybody, and I think everybody at TRI knows that. I had a purpose for doing this project, and I think the purpose was fulfilled. And the partners that I have are diligently working feverishly to, build out tools that could potentially take TRI to a completely new level of the universe. And if anything, we probably need less Brian rhetoric and more just tools that spit up signals that generate trades that make killer dough. Because at the end of the day, that's really all you guys want anyway. So I'm super stoked at the future for from that perspective, and also the human side of using these tools. How does one who's never come to trading before actually set themselves up to use things like algorithms and run small businesses of trading effectively? Not bullshit, talking out your ass, 100x, all in, that kind of nonsense. That stuff comes and goes. I mean, I'm talking about like long-term solid performance. So, part of our, mantra here at TRI is to try and educate you and just teach you the process, right? What is it, as opposed to just going in there and being a gambler, what does it look like to actually run a small business of trading, and with the intention that your business is a profitable business? So I do like the philosophy, the content, although I think over the next week or next year I'm probably going to be working on updating dating. Remember, I wrote a lot of the course material back, 2012, 13, 14. I mean, that's quite a while ago now. So I've got a lot of work to do to get TRI to that point. But I really do like this sort of core philosophy, the education program to teach you how to be an effective trader. The beautiful community. The community, of course, is what the value proposition of TRI. And it's fascinating, too, to see all the various different angles that the community's going that you can't predict. So things like, I thought it was amusing. The ladies' lounge brought a certain gentleman into their room and was chit-chatting away with him. So I don't know whether the ladies' lounge will actually stay the ladies' lounge much longer. Maybe they just don't want that. But that's the beauty of TRI. TRI will grow and morph the way that it was meant to be. And also to community members really excited, and you got Seward super jazzed about the idea of the POG NFT angle, so that the community members themselves are actively participating in the TRI project. I think that's beautiful. So the point being that at some point here, Brian had to sort of let go of this TRI and just let the universe take over. And one of these kind of things is going to be that, are you ever going to stop hearing Brian babbling and ranting? Probably not. Well, maybe a moment or two after the execution squad finally puts me out of my misery because I said something wrong to somebody. You know it's coming. But Andre, you just better make sure you're on the other side of the planet, right? When I do say that stupid thing, I don't want to be guilty by association. You come to my rescue. I know you would. Riding on the back of an EVU, right? I think I've convinced one site member of the power of the EVUs. And it's beautiful because all the stuff that I go on about over the years that I've learned and stuff, you never know what's going to appeal to people, one thing or another. So this one particular concept has caught this one person's attention, and I'm eternally grateful because I can't really sell it to too many people. Not that many people are really that interested. Anyway, that's here nor there. So, point of the matter here is, wow, it took me 20 minutes to get here. I would prefer to sort of stop, doing all the public interaction and stuff on Twitter, and I'd actually like, show notifications and really, probably important information. We do, I don't put it out on Twitter. Anybody who does follow me on Twitter, I don't put it out on Twitter, but Kevin now has got the, and I'm not quite sure, I think this is it here. Kevin's now got the the daily brief recaps going in there. So this should really be sort of like the public correspondence channel. So, if you do follow me, you're probably best to follow this. And also, too, Kevin's been working away, although I don't see them here, Kevin. But we should be tweeting out the blog posts. And Kevin's been doing a whole bunch of really cool content for the blog posts. So super stoked about that. This should be sort of our public, I don't know what the term is, interaction. TRI needs to now almost evolve beyond me. So, the European Vegetarian Union, you're close there, Richard. But I don't know whether you're aware, we used to have a running joke. I remember I used to be a commodities broker forever. And we used to have a running joke. The most important report of the entire trading month is the Hungarian cabbage crop report. You could set the entire market direction based on that monthly Hungarian cabbage crop report. But that's a commodity trader, commodity broker joke, right? Everybody, they're sitting there, crypto fans are like, what? What the fuck's he talking about? So, FYI, follow this Twitter feed for all of this stuff, just spoon-fed to you. Like, I don't even do the Daily Brief recap video. You get it just handed to you on a silver platter. Just following this Twitter feed, I think, is it's so simple. So anyway, there's that. And like I said, Kevin's been working away diligently on the blog. And, oh God, I never remember how the hell to get to the front page in the blog from the site. It's terrible. I mean, maybe, do we have it in here? No. I got to update this library, so we should have the blog link in here. You'd think I would have had that. But, like I said, Kevin's been updating the blog. I would imagine maybe we can just find it if we just go to the front page here. Something like that. Blog. Where's the blog? Bloggy blog, there's a blog in here somewhere. Bloggy blog, blog. Boom. Talking a little bit about the ETH CME futures launch, which I think was a pretty important catalyst, and you probably heard me talk a bit about that recently. US dollar index, and actually we'll probably do follow-up reports on this because I wouldn't mind sort of exploring where I think the US dollar index is really going over the next 10, 20 years. Not really a commentary about the value of these fiat currencies. We all know they're collapsing. But this sort of seesaw game that they play. Keep in mind, half of this U.S. dollar index is the euro. So is it really a question of is capital flowing towards Asia? Is capital flowing towards North America? Is capital flowing towards Europe? Right? So that's what is capital flowing towards these nutso commodity countries? I gotta tell you, this Canadian dollar is fucking stronger than I possibly imagined. I really did not see that coming. And I do, but anyway. So that would be the sort of vein of those kind of conversations. January barometer, which I think is a fantastic tool. Sort of give you a nice little roadmap of expectations, sort of when to expect the seasonal pivots through the market, and also to get the general tone of what to expect through the year. I mean, what do you like? This is like the beginning of the year, the middle of the year, the summer, and the fall into the end of the year. Uh-oh. That doesn't look good. And these guys are usually, it is the Wall Street players. So, smart money always wins at this game. So, food for thought. Good old Bitcoin. How could you not have a blog post without Bitcoin? Did see it interesting that we bumped up against this monstrous Feigenbaum level. So I got a funny feeling that this is probably a pretty important pivot point for the corn. I suppose we can get into that later on. Who knows? Also, things like sector rotation studies. The interesting thing is the first 2 week study coming out of, basically the beginning of the year told us, hey, man, commodities, the economy, and if you understand what this information is trying to tell you about the economy, does it make sense that the economy is booming here? And, cryptocurrencies, stock market, everything's going apeshit to the upside? No. That's exactly what's supposed to happen at this point in the cycle. So, this kind of information is incredibly valuable. Of course, this is the kind of stuff we teach in the school. And speaking of which, Kevin did a nice little post on the school beginnings. I always like to sort of look at things philosophically and kind of big picture-y. So, I always like to sort of start off, and I kind of like how Kevin did this with sort of, like a philosophical piece. So, kind of cool. So, be sure to check that out. And like I said, follow the new Twitter feed to get on notifications of all that stuff being updated. We'll probably also I do see it's still coming along, so it's taking some time, but I think you just got to be I think just gotta somehow just be super, super patient, and I know it's incredibly difficult. But no doubt about it. Stuart is definitely committed to this project and working his keister off. We're like almost at the point where I can actually start doing some tutorial lectures and sort of how to use this information. So anybody who's on the inside of the site, this is ultimately what I'd like your dashboard to sort of look like, and these are going to be the kind of tools that we just sort of set you up as sort of defaults. Various different technical signaling systems. Like I said, we're still working through some kinks, but on balance, things are moving forward. And we may, what I think's probably going to happen here is if somebody comes along and builds an indicator or something, and Stuart's built the algorithm around trading it. Keep in mind, we've had old site members. This is one of our old site members who's turned crypto god now, I suppose. Way to go, Da Vinci! You are the man. I suppose at some point we may actually get to the point where if you put the time and effort into build a system that works and it gives tradable signals and people find value in it, then we'll set up some sort of subscription service, and it's sort of like just a add radio button or whatever on the way shopping stuff works here online these days, and you just add the screener to your dashboard. So that's sort of the plan going forward, and I have to say that we have a ton of just incredibly brilliant people on this site that have put a lot of time and effort into building tools along these lines. And I'd really like to see the community, that's sort of around that POG NFT kind of thing, where the community itself, it becomes this sort of network. And I think it could become extremely powerful. So, and of course, Stuart's going to be at the control panel of the whole damn thing. So you better treat him nicely. I tell you, man, this is going to be an insane machine when this thing's up and running. Yeah. Oh, yeah. Isn't that funny? I mean, and actually, that's a funny commentary. This city of Vancouver, I think this is one of the reasons why the Canadian dollar is as strong as it is this just doesn't make any sense. Other than it feels like someone's getting ready to colonize us. That's the only way I can possibly explain the amount of overcapacity that is being supplied to this marketplace right now. If the local economy was left up to its own sort of devices, this place would collapse. It doesn't make any sense. There's no industry here other than endlessly building empty condominiums. It's baffling. Yeah, like I said, Cole, I think that that we are being prepared to be colonized. Yeah, it is what it is. I think I've said repeatedly over the years that actually I have to turn into a Canadian bear, because everything about Canada, unfortunately, is, in my eyes, to a certain degree, is commodity related. So the underlying fabric, of course, aside from this Fugazi construction industry, I mean, this doesn't make any sense at all. Well, so yeah, that's what I'm worried about, Peter, is that, I mean, who actually is actually going to live in any of these places? It's baffling. I mean, I can absolutely tell you there aren't that many Canadians that are actually here to actually live in all of these places. It doesn't make any sense. And where you are too, I mean, maybe the Anunnaki are like, okay, we're giving everybody, 5-10 year notice that the red dwarf is coming close, and we're all planning on moving in. And who knows? yeah, they're all trying to get Shane out of that goddamn shed and spend some of his doge. Now I'm getting into jokes that the people in the in the YouTube page are like, "What? What the hell is he talking about?" Okay, so anyway, point of the matter here is, oh my goodness, this platform. I mean, these signals are pretty damn slick. I mean, it's ridiculous, especially the key reversal signaling system. Oh, those trades are just awesome. But we are having some hiccups just in the short term, so we're just not quite ready to go. But full faith in Sjord. Once he delivers this, this thing's gonna, I think it's actually gonna revolutionize the space. So anyway, fingers crossed. And you know, while we're waiting for the sort of computer automation part of it, I do like the fact that there is enough demand to simply learn the process, that you've given us the ability to invest this capital in trying to pull this project off. Because without that capital, there's no way we could have done this. So, you know, it's a win-win. I think everybody in our education program, I feel as though they get good value for their money spent. So I like the value proposition. I think we keep the price point as low as possible. It's still a bit of money. I totally appreciate that. And, you know, actually it was weird. I don't know what happened, but there was a person that actually had a pretty sad story on the net, and actually a bunch of TRI community members, because keep in mind, these people have been doing pretty darn well. They actually reached out and said, hey, you know what, we'll pay for his course. And I was like, wow, that's pretty cool. So, you know, if you've got a hard story, and you know, we have a lot of empathetic ears at TRI, you never know. I mean, just ask. I mean, in a weird sort of way, that kind of brought you to me. You know, I honestly believe that, especially the people that first started with me back in 2013, 14, 15, 16 kind of stuff. Like, some of those people have gone on to be like cornerstones in this industry. I think a lot of them actually asked for help. And, you know, I gave God and JoJo, I told them, I said, look, I'm yours. Do with me as you please. And this is what happened. And I tell you that's the only motivation I've had this entire thing was, well, not motivation, that's not the right word. I mean, I'm motivated to get my goddamn Delacour index up and running. Trust me. But I'm a trading junkie. That's more for the love of the sport than money. I mean, trust me. We've done very well here at TRI, so we have no complaints there at all. And we've paid our taxes, and a lot. So, for the record. Okay, so blah 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 blah. Jeez, I gotta stop doing this with these damn videos. Go on endlessly. Okay, so like I had originally said, they gave you a little sales pitch of the site and what's sort of in development and coming down the pike, and also too, the school I think is excellent value, and also, you know, if you want to, I think it would be in your best interest if you do follow me on Twitter, that you follow that Twitter feed, because that's going to give you much more better quality content than my silly rants. The real purpose of these Sunday shows is really more of like a Q&A session. So I think I had started off saying I wouldn't mind that sort of my interaction with YouTube, social media, that kind of stuff is more like a Q&A, fireside chat. Don't really want to teach anymore. I mean, to be honest with you, I'm pretty burnt out, so I wouldn't mind sort of sliding away from that. And just, you know, if I can help and I can be a guiding force for the people that are teaching on the site, I think that would be beneficial to everybody. But sort of act as sort of like more just, you know, in your opinion, Brian, what do you think? And if there's value in that, awesome. If there isn't, you know, I've been playing this game so long that I keep seeing the same things over and over and over and over. So, ironically enough, you actually listening to a guy say, try and think of the mean, 50% rules, W's, stuff like that. This may be hard to understand, but by people tuning that out and sort of kind of discounting that message, in a weird sort of way, that's actually a very important tell about current market state. And unfortunately, I absolutely hate this market state. You would think, everybody else in the fucking world is like, Bitcoin, we're rich, right? And of course, go buy it, Mom, go buy it, Dad, you'll all make tons of money, woohoo! And there's Brian on the other side of the fucking room going, oh, Jesus H. Christ. So, what's a guy like me supposed to do in this market state? I hate these market states because I know that just like every other market, it will go through this particular market state, and then there will be, the worst part about it is usually, and we always say this on the site, it never changes. Bitcoin cannot finish a move without some sort of horrendous blow off top or blow off bottom. It just can't do it. It's impossible. And every move, it's like either it doubles in like 3 or 4 days, or it falls in half in like 2 or 3 days. And it's like, okay, well, there you go. So the fact that we're just slowly grinding our way higher means that whatever the hell that blow off top is, at 50 grand, we're grinding our way higher. Where the hell's the top on this thing? Could it, very realistically, folks, we could see the silly thing double from here in a week. That's usually what tops of these silly moves look like. So, it is what it is. And as I'd sort of, the worst part about it is, as I had said at like 60, well, actually, where did I start getting cautious? I think anything above 16, 17, 18,000, I started going, ooh. Then we break to new highs through 20,000, and I'm like, oh, well, it's too late to chase. And then, of course, it gets up, 30, 40, 50, whatever here, right? And it's just going to keep grinding away. And as I said, it might jump all the way up to 100 Gs. Yeah, you heard me say that. So, yeah, I'm not even showing you the chart. What's the point? Man, that's the only thing I have to say, right? Yeah, well, enjoy it while it lasts. That's all I could say. Usually, unfortunately, the other side of these markets are horrendous. So just try and play from a position of strength. Don't get caught, and God's sakes, the worst part about it is there are going to be people that will mortgage their houses and stuff to go long all in Bitcoin, and they will come out. If they can somehow cash out before the carpet is pulled out from underneath all this, they'll look like geniuses and life-changing events. But I'll tell you, it's awfully tough to do that 2 or 3 times in a row. You can pull it off once or twice, awesome. But then usually the law of Toyland catches up with you. But anyway, for those people that have done that, awesome. If anything, I would ask that you spend a good chunk of those winnings trying to make positive differences in other people's worlds. That's really your job because you were given a gift. But that's my opinion. Anyway. Okay, let's get on to the Q&A. Got about an hour or so before I hit Liam. So let's see what we can do, what kind of damage. 21st of February here, so Hello, Brian. Could you share your VCIM screener criteria? Sorry, Brian. I see it in the library. So much info. My head is spinning in the level 1. Thanks, Quinn. Okay. Yeah, I mean, VCIM is a 1/4 of the FA model in the introduction to fundamental analysis, stock screening based on fundamental criteria. So you might as well go and review the course material because it's going to be on the final exam. Maybe go and watch the whole fundamental week all over again. It's a ton of information, don't get me wrong. But we break the criteria in the screener down very explicitly. And also, too, you know, that's the kind of thing, that sort of secret sauce, that model was given to me by an old VSC floor trader. And if anything, I would almost like to sort of keep that into the sort of professional people, you know, versus just, you know, handing it out on YouTube and people bastardizing it and stuff. So let's try and keep VCIM in-house. All right, number 2. Hi, Brian. In the lounge was shared some charts of big name BAC, JPM, VC compared to the M2 money supply. Can you go on this type of point of view? Where we have to take in consideration M2 money supply in our trading plan. I mean, from my understanding, this point of view is really interesting, useful for long-term investors, right? Right. The problem here with this conversation was that for a long period of time, and actually really just classic economics, it was sort of sacred that you did not mess around with your country's currency. I.e. mess around. Think of the currency as sort of your company or your country's capital stock. And at any given point in time, the marketplace sort of assigns a value to that capital stock. The only problem, of course, is that that's in the real world. Oh, goodness. I mean, they always say, you know, things like history is written by the winners. So you don't really hear the loser's perspective of history and what maybe was justification for their behavior. You only hear the winning side. We can go, and then of course lobbyists that have certain agendas, they will also promote that we are told and taught a certain story. So, you know, what's real and what's sort of bullshit. So, as I said there a few minutes ago, you know, in classic economics, and you think about it, you know, how much gold do you have in your treasury? All right, you're going to write notes against the gold. So the notes are going to circulate around in the economy. The baker is going to pass the note to the customer or I guess customer is going to pass the note to the baker when they want to buy a loaf of bread as opposed to carrying around gold. I mean, it's pretty straightforward. The value or sort of the price of those goods in that gold note certificate is really nothing more than just how much gold is actually backing that note. If there's a lot of gold backing that note, well, then the prices of the loaf of bread will be really cheap in that currency. If there isn't much gold backing that note, well, the price of the bread is going to be very expensive relative to that currency. I mean, that's really the basics of how currencies sort of are supposed to work. They used to in like Roman times, they wouldn't even take the chance, and you know the goldsmiths and all that in the Middle Ages created this sort of note system, but like, thousands of years ago, they wouldn't even take the chance of the note. They would just take the gold and stamp their head on it, or the silver, right, and stamp their head on it, and boom, there's currency. Merry Christmas. And the Spanish used to do that in the 14th, 15th century with all the goddamn gold coins, the gold that they stole off the South and Central Americans. They just melted it down, turned it into coins, and then that was the currency. Boom. And they used to... The irony of it all is all you cryptocurrency fans should understand now the connection with this name of this silly thing that you guys love so much. What was the minimum denomination of a currency unit, say, 400 years ago? Does anybody know? This would be an interesting trivia question. Does anybody know? What was if you wanted to buy something, you usually bought it with this. Hint, 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 it has something to do with what you guys are all in love with. No. You're close. Think of the thing that you're in love with. No, the other side of the word, damn it. That's so funny. None of you guys know that. That's hilarious. A bit. You used to always buy shit in bits. And what is a bit? It's a seashell. I like that, Constantine. Does anybody know what a bit is? Maybe you don't know what a bit is. It's the smallest portion you can break a coin into. Right? If you take a coin and you can break it in half. And, for a long period of time, people used to actually barter in gold coins, half gold coins, quarter gold coins. What happens when you break a quarter into a half? You get pretty much the smallest size. Once you get to that size, it's really difficult to break them down any further. But that's an eighth. What is an eighth? It's 0.125. It's half of 25 cents. That used to be actually a very common price for things. Who can tell me, what are the words that go to this song? You probably all heard this before. Do you know what the words are that go to that? Mind you, that was terrible. I don't know how that came across. Does anybody know the words to it? I mean, the irony of it all is it has everything to do with the thing that you guys love. Anyway, it's kind of a fun history lesson. An eighth is a good one. An eighth? Dude, I'm up to like a half these days. Is that Queen? Oh, was that terrible? Maybe I should get the soundbite. Anyway, it goes, that's the chicken dance. Yeah, right. You guys are funny today. Somebody brought their joke book. It goes, shave and a haircut. 2 bits. You never heard that before? Has anybody ever heard that before? Anyway, those are the words to the song. Shave and a haircut, 2 bits. And everybody knows it from Bugs Bunny. Yeah, that's the only way you'd know it nowadays. So anyway, the point here is that historically your currency was sacred. And, like we talk about Zimbabwe. And you talk about Germany in the Second World War. And sadly, it scares me immensely, but I think exactly the same thing is happening to these Western fiat currencies. I went to dinner last night with a friend of mine here locally, and it was a nice dinner, don't get me wrong. I mean, I would have paid a good couple bucks for it. Bill came to like $160 for a dinner for 2. I'm like, what the fuck's going on here? This is ridiculous. So, sadly, I think actually we are living right now through kind of like, sad, the worst is like people who are on pensions. Andrew and I were joking yesterday, and he was kind of like, well, minimum wage $15 an hour. But then we actually went through the math of what $15 an hour, because keep in mind, those people, they pay taxes too. And a lot of our tax system now is a user-based tax system, tax on gasoline, tax on smokes, liquor, whatever, right? So a guy who makes like $15 an hour, oh my God, are they ever getting squeezed here? And people that are on pension, Social Security, they work their whole fucking life. And they're on like an index pension. There's no way in hell these phony baloney government stated inflation figures are accurate. That's laughable, and we all know that for years now. And now, sadly, they go and double, the I can't remember what the exact numbers are, but the debt that's being printed here, the printing presses are just going overboard. So this image right here is what I think is a really good way for everybody in the world to be able to see the difference between what's real, like the real world. You go to the grocery store, you go pick up your kids from soccer camp, you're going to your local bowling alley for league night, if that's still a thing. I suppose none of that stuff is happening in this COVID nonsense. But whatever there is, social activities, right? Real world, just, people living their lives. Versus what the banking system has put in place. How do we say this? To just make sure that the system keeps going. And someone saying, hey, fuck, even M2 is fucked around with. Yeah, I mean, who knows what the real image looks like here. Like I said, $160 for a couple guys out having a half-decent meal. Come on, this is getting ridiculous. I mean, and the worst part about it is I think they're going to use COVID as a justification for the hyperinflation. So maybe that meal by the end of the year is $360. Maybe it's $500. The good part about it for you people that invested in cryptocurrencies and Bitcoin and all this wonderfulness, we've talked about this before. Great. Your Bitcoin's $100,000. So that means you go to the grocery store to buy a loaf of bread and it's $50. Wonderful. This is an awesome hedge, the Bitcoin story, and I think it's serving its purpose. The tragedy of this is the gold bugs. I would imagine with this hyperinflation, the cost to actually mine an ounce of gold might actually be higher than what the current market price for gold is. It wouldn't surprise me. The only word of caution I would give all of you, including students, public that I talk to, is this yesterday's story? And of course, the public, do they buy the story at the beginning or do they come to the story late? I mean, let's be honest here, folks. Does the public really make money investing? Do they ever make money investing? I mean, come on. Half of the reason why for most of my life, people went and bought mutual funds and they bought index funds, things like why the S&P 500 depository receipts, which, keep in mind, these stock indexes are incredibly manipulated along with the M2. So they're kind of like rise-only markets. So if you just buy the index, you're pretty much guaranteed to be buying an asset that's going to be rising in price. Why do they become so popular? Well, the reason why is because the public, whenever they come in and they buy individual stories, they're usually buying a news headline. And the classic story goes, you buy the rumor and you sell the news. So, all these mutual funds and, various different ETF players all coming in listing Bitcoin ETFs here. Yeah, that makes sense because they're just going in to try and capture all that purchasing power. Sad thing is now we've got, they're having a bit of a difficult time, so that's interesting. But we've got technically a bunch of capital that's going to hit the market. My hunch is those stimulus plans and stuff like that probably only come in if you see the market break hard. If we keep seeing the market racing higher here, then I don't know whether Biden can really sell the emergency package. It just doesn't work if the stock market's racing higher. Usually to get the politicians to act, kind of like what you saw last March, you got to inject some sort of crisis, right? And they go, oh, okay, I'll do it. Right, but if they're not in that kind of mode, then especially the Republican, the right wing part of the U.S. government, they're going to put up a fight, no doubt about it. So anyway, back to our original talk here. The baby boomers came into the economy, and of course they overspent, and the brokerage industry and stuff like that. They broke down all the barriers of entry. So they were back in the business. You could argue that through this period, a lot of politics and stuff helped the bubble continue get bigger and bigger and bigger. The bubble actually popped here. Financial crisis, all that kind of stuff. So then the powers that be said, look, we can't have this happen. If we let the bubble pop, then basically it's Great Depression. United States will probably lose world hegemony status. We'll probably eventually head into some sort of major global war, just like what happened in World War II and stuff. So they said, we can't let that happen. So what are we going to do? And famously, Mr. Bernanke said, well, just go and print more money. Historically, that was not right. Whenever you print money, it goes the way of Zimbabwe. Everybody knows the Zimbabwe story, the Venezuela story. You print more money. The Germany and World War II story. You print more money than just to pay your bills. You create hyperinflation. That's just the way it goes. So the Americans decided to do this. I think to a certain degree they kind of got away with it. Germany World War II kind of scenario, we should have seen like wheelbarrows of money. Now it's only like $150 for dinner for two. Venezuela, dinner for two is like $1 billion, isn't it? How many Zimbabwe millions does it take to buy a loaf of bread? I don't know. So to a certain degree, I think that the 1% has gotten away with this, and the banksters have gotten away with this. It's just they got to get through this pivot. They have to basically convince the public it's okay to add a zero to the end of the price tag. That's the impression that I've gotten. And I think that's basically what will happen. One might argue, and I've seen this in the inflation cycle a few times now, that each cycle the value of money has to fall by if you just think about it, right? If inflation is running at like say 3%, 2%, that's what they want, then at 7.2%, your purchasing power of your currency falls in half in 10 years. So we certainly don't want that, but maybe a third of that is acceptable. That's that 2% that the Fed always talks about. So at a third of that, the purchasing power of your currency falls by 33% every 10 years. So that means in one full sort of generational cycle, 30, 35 years, your currency has gone from 1 to 3 to 9, right? Each time your currency gets knocked by 33%. That's what I think's going on here. So, I like to use analogies to try and understand cycle pivots. You guys heard things like the Big Mac indicator. That's a great sort of public speaking piece. I like to use the Subway sandwich. What's Joe's six pack? What can he afford? What's taxing him just too much? When I was starting out in the brokerage business around that 2000 peak, which was the price peak of that cycle. And keep in mind, I think that the prices that are being established through this cycle peak right now will go on for the next 20, 30 years. These will be the price references that we use. The prices that we were paying 5, 10 years ago, got to add a zero onto the end of all that, just to keep it equal. So that's sort of what this image is. Is if you take out the money printing aspect of the value of things, remember our story about the goldsmith, and if he decreases the amount of gold that's backing his notes, then what ends up happening in the marketplace is the baker says, look, I know what a loaf of bread is worth. So instead, if the bankers reduce the reserve by, say, 50%, then the banker says, look, I just have to double my prices because value is value. So I think that's what's going on with stocks here right now, is as they print more money, the price of assets keeps going up and up and up and up and up. And really, I think it's nothing more than a zero-sum game. That's why, if you want to try and understand value relative to the currency being stable, we want to try and remove that printing of money aspect. How the hell do you do that? I spent a lot of time, years, talking about this. In fact, when I first taught this course, I had to try and teach off of just these charts. I didn't have this data to be able to the ability to interpret the data with the money printing aspect of the story removed. So TradingView, bless their heart, a while ago, was able to give you a spread. That's what this is. This is a spread trade. What this is saying is this is the trade without the spread, just the price quoted in dollars. This is the trade priced in those same dollars, but taking out the dilution effect. As the asset gets more and more diluted, this M2 number goes up. So even though this number is going up, this number is going up as well. So as a result, it takes that equation, that part of the inflated price aspect out of the equation. If we just say, look at M2 they haven't fucked with the money supply. It's stable. Think of gold, right? In our story about the baker. What do those assets actually look like? And so this on the right is an image of the U.S. stock market, the Dow Jones Industrial Average, and it'd probably be better to do this in the S&P 500, be a better, more broader picture. But you can't get the data for this kind of stuff on the S&P going back 100 years. So anyway, I use the Dow primarily. And I think this is the image that you actually get, which to me actually corresponds, I think, much more accurately with what should happen in our society. Oh, I never did finish the subway analogy, did I? Sorry about that. So in 2000, I used to go, that was when I was 20, 30 years old, late 90s. And actually, it's really more like late 90s. Because once 2000 hit, fucking the Fugazi machine started and prices took off. But in the late 90s, I used to go to Subway every day, and I used to have a 6-inch tuna on cheese with drink, chips, pups, and cookies. I still remember the line every single day. They go, drinks, chips, pups, or cookies? Anyway, I used to pay $2.79 for that sandwich. Every single day, religion. And also, too, it was a good way for me to stay relatively thin. And I noticed that I didn't put on a lot of weight when I ate that sandwich every day for lunch. Anyway, that's here and there. Point being, think that to 275, 250, 275, somewhere in there. So if we use that logic that the banksters are depreciating the currency, call it inflation, call it a banker tax, 1%, living off of the masses, whatever you want to call it, that's baked into the system. So by definition, at the end of the cycle, that price for that sandwich should be about 3 times that price. So it's 3 times 275. That's what, 6, 7, 8 bucks, 8, $9, somewhere in there. And lo and behold, you go to Subway today, that same 6-inch tuna on cheese is $7, $8. Whoa, what a surprise. So here's my point of all of this. They've done it. They've gotten away with it. We are in that sort of ultimate end game of the getting away with. And frankly speaking, I think that what we saw, Jupiter Saturn cross, that was the apex of this whole cycle. And JP Morgan himself says millionaires don't respect astrology, billionaires do. So I suppose that now the analogy would be you're rich if you're a billionaire, and of course you're the 1% if you're a trillionaire. So I think that's the way the story goes nowadays. And I guess that would make sense. 100 years. I think they've said the US dollar has been depreciated by about 99%, so 100x. Just add 2 zeros on it on the end of that. So 2 zeros on a million would be 100 million. So 100 million, you're rich, but you don't really respect astrology. You're just rich. Maybe you started a company or something like that, or run a sports franchise or something, and you're a player. But the millionaire analogy to that would be 100 million. A billion, 10 billion and above. Funny analogy. So, I like this kind of image. I like this kind of thinking to try and figure out what value is. And, if you see a W on this chart, what do you think is going to happen to your asset on this chart? And, in a weird sort of way, this is exactly what's happening in cryptocurrencies, where, ironically enough, your cryptocurrency valued in Bitcoin looks like this. Bitcoin now is sort of taking the fugazi out of the market. And if you look at your cryptocurrency versus US dollar, it looks like this. So, in a weird sort of way, Bitcoin is now sort of like ultimately M2 money supply adjusted. Right? Like if you, we watch a whole bunch of altcoins. I mean, it's almost shocking. I just made that connection. That to me is kind of funny. But like any of these, right? Versus Bitcoin, okay, well, there's relative stable, right? There's a W. I mean, holy shit, that's the first thing that I touch on, and that's versus Bitcoin. I mean, this is everything that we teach at TRI. I mean, everything that we could possibly teach you at TRI is contained in that image. And oh, by the way, this was just the most insane buy level right there. But anyway, that's here nor there. But looking at it versus US dollar. So that's sort of the value, M2 adjusted. And then there's the Fugazi. That's pathetic. Is that really the world we're in now? Is literally, oh my God, you know what that is? This is Bizarro world. Everything is exactly opposite. I can't believe this. Oh, goodness. That's hilarious. So anyway, that's kind of a fun conversation. Of course, the last comment about crypto is going to really make you scratch your head. So the point here is, if you look at it versus like a big stock, and the question was, hey, I'm looking at these stocks versus M2 money supply. If you see a bottom, a W, and really, frankly speaking, I don't think this is a very pretty W, but they never make markets pretty for indexes. What I think is actually going to happen here is going to be a head and shoulders. And once that breaks out, away we go. And interestingly enough, if you look at this image relative to other exactly the same cycles, exactly the point where there's the most fear, where it's been horrific economy, where everybody in the public is full of despair and they're just totally ready to just give up their life to Klaus, and Klaus is sitting there with Mr. 1% going, give me all your stuff, I'll take care of you. You own nothing, you suck my penis. Oh boy. Now, there's no way Tide Laundry Detergent's ever going to even touch a channel where a guy says something like that. I'm sorry, I really shouldn't have said that. That's terrible. Oh, goodness. So, is there another time in history when the economy actually did perfectly similar generational cycles, and the economy and the stock market in real dollars, because then they didn't fuck with the currency, did it look like this? And that's this image. Right, this is the Roaring 20s, and this is the Great Depression. This is coming outside the Great Depression, the other side of that cycle, and what came following. This, ironically enough, this is heading into the next greed cycle. This was a greed cycle. You see the way they bid assets up. This is a greed cycle. You can see what they did here. So we look at this image. There is that respective greed cycle, good old baby boomers. There is the Great Depression. There is this wonderful past 20 years, which has just been an absolute joke. I find it fascinating because, like, remember, I was a broker, trader, all that kind of stuff, all through this market. I mean, through this time, capitalism was a lot of fun. I mean, it was fun to be alive. No offense, but this past 20 years has sucked horsecocks. I mean, it's terrible. The overpopulation, what they're doing here, the governments, the way they're treating their population. Back in this environment, the government actually listened to the people. Imagine that. Oh, goodness. So, sadly, unfortunately, I don't think we're through this cycle yet. If we're here, that would be totally awesome. I don't know whether we're still here, but if we did just that simple overlay, it sort of paints that we're kind of like in this chop right now. And I think, what ends up happening here is that the burr machine continues. The stock market's going to continue working its way higher. But unfortunately, we're not, you were probably going to, I wouldn't be surprised if we come up maybe even and kiss this neckline here. But it would take a massive expansion of the economy to really push us through this neckline. This neckline, in my opinion, is going to be an absolute brick wall of resistance. So, and who knows how long this goes. This might go on for another couple of years. And how much fucking burr is there? Who knows how high this damn thing goes? As all we do is we churn our way up into this massive resistance level. So, Bitcoin 100 G's, 200 G's, 500 G's, $1 million, $5 million, does it really matter? Somebody pick a number. I'm sure Da Vinci knows where the hell this thing's going. 500 million gazillion jazillions. Somebody ask him where this thing's going. Hope that helps answer that question. And really, my suggestion is, if you're looking at, blue chip stocks, and really, you could do it versus penny stocks, but they're so damn volatile. And really, all we're doing is we're just flipping, right? Just give me my double, give me my double, give me my triple, give me my quadruple, right? Just bang out, bang, 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 make money from trading. If you are thinking about like quality investments and investments that are actually investment worthy kind of idea, not just a trade, then I would strongly suggest that you take this approach. And if you see nice big fat weekly W's coming in on this kind of study, it's telling you that you're buying value and it's not just part of the fugazi nonsense. I mean, be interesting, just curiosity. This is actually a stock that I really like. I mean, how boring is this? Medicine Nova. Doesn't really look like a very good chart. But I tell you, if I get a W on the other side of this trend line, I am going to go eep shit along. So, that's kind of weird stuff that I like to invest in. Anyway, interesting story. I'll be talking about this with my fun little investment group. See what happens here. I don't know what the weekly looks like. Oh, yeah, that's not bad. Okay, so what was I saying? If you want to look at, what the hell? Actually, this might be fun. AMZN versus M2. So let's see what Mr. Bezos is really doing. All right, this is like a bull market to me. This is a log scale chart, so it really actually shows you growth. And if anything, this is the kind of image that I want to see to get remember I showed you that chart of the Dow there? So for me to really believe that this market is bottom, we're heading to the next wave, right? What I want to see is the breakout through that neckline. And then look at this, right? This is a nice, call this a Wyckoff check. But you get like a W that happens right off of this neckline. That basically set up that launch pad. So that's what I kind of need. Like I said, right now, I think we're, if this was the Dow, right, we're kind of in here. And we probably got to swim around here. Where if we are really going to break out through that neckline, there's going to be a battle at that level for a while. So anyway, we'll see how it goes. But this one in particular, I was a broker through this. Keep in mind, they were giving these stocks away. This is the dot-com bust, right? And, this is kind of like cryptocurrency right now. We're going through this phase right now on Bitcoin. Who knows where the fuck the top is? But if and when, keep in mind, this is a weekly price chart, so you can't say you didn't have a ton of notice. But if we go and start smiling out, then you'll know, oh boy, there's probably trouble ahead. I don't think we've ever actually seen that on Bitcoin yet. Usually the tops, keep in mind, there's a weekly chart, right? Usually the tops kind of look like this. Then it goes screaming down and then right back up and then a huge weekly and then woohoo, see you later. I've seen that happen a few times on Bitcoin. It's how it acts. But, actually to see this a little bit better, let's get rid of the log scale. Let's just look at the regular. So there's what I'm talking about. So, when Bitcoin starts doing these big honking M's and the price volatility is just insane, and then it goes in M's, well, then, what this did? This is exactly how Bitcoin did CME listing, then the summer. We never did get the big counter trend rally back up top because I think the 1% did not want to have any crypto kids filled up there. Got back up to 13 grand. Then we did this. And then, remember, the market just collapsed, right? If you pull up a Bitcoin chart, that's how 2017 market went. Now, maybe you could argue, maybe, right? We just did for Bitcoin, we just did what Bezos is doing. Actually did in 2000. Maybe. Is Bitcoin going to transition into a growth story here for this coming greed cycle? Maybe. I don't know. I still think it's perceived as a store of value, and I think the current market state is still playing off of that because nobody knows what the hell the U.S. dollar is worth right now. These fiat currencies, right? $160 for fucking dinner. That's ridiculous. But if anything, what I would suggest is, you notice you get these deep pullbacks, right? This is a weekly chart. So if you are a Bitcoin bull, right, this is the kind of stuff that you want to wait for, right? And I mean, look at that W, right? This is a weekly chart. So this one didn't W out really prettily, which, you know, probably actually set up you had to have the balls to step in there. First W on the other side of a trend line. But I suppose you could have bought that huge risk, but nonetheless, you know, there it is. Those are the levels to get your butt in there. So, I mean, let's go look at Amazon. Let's see what it looks like now. Oh, boy. I mean, this is getting steep. Interesting how we talked about the, you know, do we see an M? It's interesting how it's not really. I mean, we have this high here, but, you know, it's kind of stalled, eh? So, you know, as I drew, you know, with these, and if you are thinking about buying Amazon, participating, just wait for the consolidation. And that's probably the area you want to take a shot at. Right? Get the breakout, nice consolidation, away we go. Or, you know, if you're a reload zone fan, take stabs against those lows. So that's interesting. Actually, if versus M2, this does not look like a buy whatsoever, and it actually looks like maybe, relatively speaking, if we go through this level here, that's a big honkin', that's like a triple top breakdown. So kind of flirting with disaster here. You know, I have suggested you want to see something really freaky, but you crypto kids are not going to like this. But check this out. If you're a fan of the NASDAQ was sort of the big growth proxy last cycle. Actually, it might be interesting to look at it versus M2 too as well. But I don't know. It doesn't work that way. Damn it. I got to go index. I think this is it. Yeah. I mean, look at that MA. And actually, this is what I wanted to show you. If I show you on log scale, maybe it's easier to see. What's that date? Who can tell me what that date is? That date right there. Meow. No, and that's the interesting thing about it, right? This was the Y2K. Ah! But look what happened on the other side of it. And this had me scratching my head for the longest time, because I'm like, well, everybody says that the cycle's supposed to pivot, and Art Cashin's down on the floor saying, hey, 17-year bear market, and all that kind of shit, right? And what does the market do? It just keeps grinding higher and higher and higher right into the beginning of March. I don't know, folks. Is there any asset that you're all in love with that's kind of doing the same thing right now? Is there? I wonder. So, please be careful, people. Caramba. Totally, dude. I honestly think that what you're seeing with something like Bitcoin is coast to coast. What's so fascinating is that Bitcoin just did this a year or two ago, and nobody seems to fucking clue into this. It's shocking. But look at the date of this, right? Is that, no, that's, yeah, right here. So that is December 11th, and gee whiz, the date of the low, I think, was the week of December 10th. Boom, boom, coast to coast. So, you know, could this be a 1 year to 1 year? 10x? And actually, it's going to be more than 10x, probably. It's going to be 100x by the time they're done here. It feels like that. And notice, you know, right at the end of the move, look at these just launch straight up, right? I mean, the price here was 7,000, and here it was 13,000. Didn't we hit 20 G's on this thing? What am I doing wrong here? What does that say? Yeah, 19,666. 666. Now, if this thing really was truly left to its own devices, would it have stopped at 666? I mean, somebody run like a mathematical odds maker And as this thing's running up, what would be the statistical odds of that stopping on exactly 666? I mean, fuck me. That's ridiculous. Oh, goodness. So, it's kind of funny how, kind of funny, I don't know, maybe it's funny, maybe it isn't. I showed this image to you, like, I lament about Kevin's fucking killer trade right there. Just the most insane trade. Talking all the way through this. It was so funny. I remember through this period we were conjecturing, would the market stop at 61.8? It just goes to show, don't have an opinion in this. You just don't know what the hell's going to happen. I love the idea if you can buy something, then just put yourself on a forced selling plan, but just try and hold on to some because you never know what the hell's going to happen in this world. I appreciate this whole concept of like hodling. I don't know whether it's actually psychologically good for you to go through these just absolutely insanely violent swings. I believe it's psychologically taxing. But, it's just Brian, old man stuff. Remember, I got a good chunk of the hair still left on the top of my head. It's going, though, admittedly. I'm not gray yet, and there's a reason for that. Had a horrible life event 10 years ago. I'm slowly getting over it, and I think I feel as though I'm emerging out the other side of that now. But on balance, I really try to live as low a stress life as possible. You can live that high octane, high stress life. I'm a little perplexed though. That there's I think there's a bit of a conflict here. Because if you are a hodler and you're from Moon Boy, exactly when do you actually declare victory? Is there actually ever a number that says that, I won? Well, what is that? Is that the moon of Earth, or is that Mars's moon? Doesn't Mars have a moon? I don't know. Is that Jupiter's moon? Is it Pluto's moon? Is it 5 suns over 4th planet's moon? So, I do, for whatever it's worth, like to suggest to people that they monetize to a certain degree. Now, it doesn't mean you have to keep it in money. But, if you were in this adventure and you did do well, for God's sakes, pay yourself a little. You don't have to sell all of it. You don't have to sell any. What is moon? I mean, that's one thing that I find really interesting. And then if you sold at what you defined as moon and it goes 10x from there, how do you feel? So I'm not really going to put a moon target on this thing. I have no idea where the hell this dam's going to go. When the adoption curve tops out, okay, well, what is that? And then, of course, if we happen to have a 70-80% haircut along the way, how are you going to feel? If the answer is you go, I don't care, it's no big deal to me, then cool, okay, fine, hodl away. But I do find a lot of young people go through these swings. They are over the top euphoric through the top. And then conversely, they are horrifically depressed and suicidal as we have to go through the normal correction. And as you can see, this is even a logarithmic curve. You can see how violent the corrections are. Don't kid yourself. When this thing is done its move here, wherever the hell that is, there will be a 60, 70, 80% correction on the other side of it. It's just the way these things work. So, like I said, I've been at this game 30 years. I've seen, at least now I would say about 7 or 8 now of these various different cycles. The only problem with this particular cycle is that there is a serious lack of confidence in the fiat currency system, and the 1% just have to try and keep the Fugazi going. So how do you actually figure out what the hell real value is? And I think it's gonna, we're still in that transition phase. I would have thought we've already topped out, to be perfectly honest with you. And we're sort of living yesterday's story right now, the end game. The problem, of course, as I said to begin with here, is that the public usually buys at the end of the move. Remember that NASDAQ chart I showed you? You guys have to, if you don't learn this, that's fine. There's no skin off my back. But at the end of this move here, and how I knew, like subconsciously, I'd been at this game long enough, even here, because I'd been studying the market since basically the early 80s. But I sort of knew that the writing was on the wall, and this is what sort of clued me in when a university professor, you'd think a university professor, that's pretty respected person, and it's like an Ivy League university professor too. Publicly laughed at a CEO of one of these tech companies because he said that he was selling his stock and getting out of the market because this had just gotten ridiculous. That was right here. So I would fully expect that the sort of talking heads, even university professor talking heads, would probably look at me right now and say, "You're an idiot," and laugh at me. Yeah. That wouldn't surprise me. I don't know whether it's so much in stocks. Like I said, I think we're heading into a growth cycle, so I don't think stocks actually are the biggest worry. I'll tell you what usually happens, and I think it's important also too to note that this top came in March, where we are right now, and price is going parabolic. Then we have a sharp pullback, and people sort of live in this sort of false belief that no, everything's still the same, and then whoosh. So this is sort of what I think's going to happen here over the next, I'd probably say 6 months or so in the cryptocurrency space. Is there will be some sort of pivot top. It'll be pretty violent. And I remember in Bitcoin 17, same thing happened. I was traveling through Europe at that time. And we put in a top, price had come down, and people had just sort of said, okay, that was it. That was the correction. Everything's done. And then there was one more big fuck you in the fall. And I think I've shown you guys before, like if we think about last commodity cycle, what was the favorite asset to trade that was sort of the fuck you vehicle for the system? That was gold, and all the baby boomers had just discovered commodity trading. And you see that gold topped. It topped in its particular cycle on late January, January 21st. Is that sort of around where we are? It's kind of close. Then, there was a break. And this is what I actually thought was going to happen here with crypto and Bitcoin. But so what? It didn't. It's just the way it is. And then we sort of are in this kind of false sort of sense of, everything's fine. Don't worry about it. And then, the break confirms the M, and then we actually have to go through. And unfortunately, because so many people were so long, that it just took forever to finally find the bottom. It took like 20 years. So, and probably on a relative basis, there you go, something like that. Trust me, I used to prospect guys, like when I was a rookie broker and all that kind of stuff through here. And I used to prospect guys, and they would tell me, "Brian, I bought my gold at $700 an ounce, and I ain't selling it until I see that price again." And it was just torture, right? I prospected for like a couple of years as a rookie broker kind of thing. The interesting thing is that that was actually not a good time to be a seller of gold, and there's the other side of that trade. We fast forward to today. Is this really coming in and buying an asset? Just look at that chart. And coming in and buying that asset up there. Are you buying a cheap asset? Come on. Let's call a spade here, people. Is that cheap? That chart looks rather bothersome. And we'll go back to sort of regular chart. I don't know. Does that look cheap? That does not look cheap to me at all. That looks expensive. Anyway, we'll see how it goes. So, this cycle, was that the peak for gold last year? Bitcoin ate its lunch, whatever. Let's see if that actually starts turning into that 1980 image in the gold market, because that's probably a really good commodity proxy. Right now, the corn's going through sort of, am I a safe haven vehicle? Maybe I'm a lightning node thing and people are going to use me to buy stuff. And of course, this thing on the other side's kind of like, hey, I'm the supercomputer of the world, and buy me, and you'll make a fortune in DeFi. I just still don't even understand what the hell DeFi is. But hey, buy me, spend me on gas and pay a lot of fees, and you will get rich. Okay. All right. Jesus, I've been talking a long time here today, haven't I? Blah, 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 blah. It's so funny. I load these things up and I go, I haven't got a fucking clue what I'm going to say here. And then I go ranting on for a couple hours. Hey, you guys enjoying the edutainment today? What do you think? You getting good? Cheryl, you getting good quality edutainment? Dance, monkey, dance! Bang! Bang, 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 bang! That's good. PMA for the win. I sure hope... Okay, so hope that spoke a bit to your inquiry there. Alexandro... I don't know whether you're here or not. All right, people on YouTube seem to be enjoying the edutainment, so that's good. Hey, I got a thumbs down. Oh, I hate looking at that shit, though. I thought I turned that damn stuff off. Oh, goodness. I thought that here's a funny anecdote of the times that we're in. Yahoo seems to be the only news source that you can get news without hitting some sort of paywall. And I thought it's funny. They're articles, right? I mean, this is brutal. 7 blockchain stocks to buy to go beyond crypto. And what are they? I mean, obviously, this is clearly a sales pitch. It's a total commercial shill. They are Visa. Visa? That's like the anti-crypto. They're the fucking enemy. IBM, Big Blue. Aren't they supposed to be Big Brother from that 1984 video? They're also supposed to be the enemy of decentralization. CME Group, you gotta be kidding me. No, god damn it. That is the 1%. Those are the people that you all hate. I thought that's hilarious. So total shell. And then, okay, the only I think stock that actually is sort of like something to do with Bitcoin, they're fucking touting an OTC stock? You gotta be kidding me. And you look at the fucking stock chart, and yeah, it looks like barf. I'm sorry, that's what I see when I read that, barf. Oh, goodness. So that's, if anything, this also too, remember I talked about market state. You hear these clowns on like Yahoo Finance talking about crypto. Do you think you're actually buying value? Come on. By the time the public gets shilled this is Barstool guy coming in, that kind of nonsense. It's not good, like, quality fundamental analysis. And, do yourself a favor, pull up this Bar Farms chart. It's horrible. Terrible, terrible idea. Oh, well, crazy world. Okay, back to your questions. Fuck. What type of stock can we use as a proxy of bond market? Well, I wouldn't use a stock. Mind you could. You could follow the utility sector. They're pretty good for following the bond market. And in the, if we can get Sjord back to the breadth model that we had running a week or two ago on the dashboard, you'd see that the utility breadth looks very similar to the bond market breadth. Probably, I would say the best thing for the bond market is to use the ETFs, or exchange traded funds. And the easiest one for the bond market is TLT. It's the U.S. Treasury 20-year paper. It's average duration. Mind you, I'm sure everybody and their brother will say, screw buying bonds, go and lock in some guaranteed DeFi gains, because that principle is guaranteed absolutely 100%. TLT. This is the U.S. Treasury bond ETF. You can see lots of pretty notations on the chart. And this is the 20-year U.S. Treasury bond ETF. There's also the 5-year, 10-year, 2-year, if you want to watch the yield curve. So hopefully that helps answer that question. We get tons of stuff. Go watch the videos in the library on how the bond market works. Alessandro. So pop into the library. I would suggest you just bury yourself in these videos to really understand how, where the hell is it? Somewhere down in all this stuff. How markets work. So, you know, the bond market, the spreads, the funny vehicles that I like to follow. I talk about all in these videos. So that's what I would suggest. So I don't know whether, Alessandro, if you're here. The short answer is TLT. Nice and simple. Done. Can you talk about chaos level and different time frames that you recommend if you have not already talked about it today? Do we sell half strategy or sell all at 4.669? Probably best, Waleed, and you've been PMing me, so maybe PM me through a daily brief. We can. Actually, I did a couple walkthroughs recently, so let's keep it internal. Not really ready to talk publicly about how that all works. But I know definitely on the daily briefs we've done lots of examples recently. Probably also search through the daily brief library. I think these things are searchable. I can't remember. But there is a video recordings page on the site. And I mean, fuck, we've probably done like 5 million videos here now. So, ooh, look at that, freaky. So, I mean, through here, if you search just for Faugenbaum or 4.669 or anything like that, I'm sure whoever's done the write-ups here will be more than happy to make reference to wherever I did that. So just do a little bit of digging on the site and you should be good to go. Or, you know, if you, after you're digging, you just can't find anything, bug me on a daily brief. What are you going to do to take advantage of the higher yield in bond market? What are you going to do to take advantage of higher yield in bond market? Well, I don't know. You know, I mean, the long and short of it here is I have a really simple philosophy in life. Neither a borrower nor a lender be. So I don't know whether I really even want to be an investor in bonds for the next 30 years. Prices are going to continually fall. Interest rates are going to continually rise. And it's a mug's game. And of course, they're going to, I mean, these stupid Western governments. When was the last time actually somebody actually paid for government programs with tax receipts that were actually generated? I don't think that even exists. So buying government paper right now seems like a stupid idea. So unfortunately, you know, for like 60-40 mix bond market efficient frontier kind of conversations, you kind of don't have a choice. But that's really more of a risk. How do you say this? What's the term I'm looking for? Risk-adjusted performance, I guess, where it's just a good idea to have assets invested in guaranteed vehicles. You know, if you don't want to invest in bonds per se, or especially government paper, you might want to consider investing in like corporate convertible securities. Then that way, if the stocks do perform, you can convert them into the actual stock down the road. So that's something to consider. But take advantage of higher bond yields. I don't think they're at the point where they are attractive enough for me to want to take advantage of them. I mean, going and buying a government guaranteed paper, which I know they're going to dilute the value of, I know they're going to dilute the currency base, and being happy with like a 3%, 4%, 5% yield, I can easily make double my money. I could take 5% of my stake, double that, and in essence, I've just generated a 5% return from my portfolio, and that's one trade. So that's not an effective use of my capital. I'm the type of guy I would rather just be, and of course this is horrifically unpopular right now, but I would personally prefer to just be in cash. I've got now, I mean, the market's handed me about $50,000-$60,000 in free stock over the past year, just by that 5% principle. And actually not even, I was just doing like 1% total chicken shit. And just saying, if it doubles, it goes half. And then you get some ideas like, Mara, that's giving you like 7 or 8 doubles. So, just, ridiculous money. It's like a free 50 grand. Now, I guess I'll use that to offset the falling purchasing power of my currency. But I'm the type of guy, I like to just sit on a bucket load of cash, go in, snipe ideas that I think are good value. I'll just sit on the idea and, if it's a technical setup, then follow the technical criteria. If it's just a fundamental pick, nanny nibbles, just buying the bottom end of ranges, value kind of idea, I'll just sit on it and I just won't do anything. That's not conventional wisdom. Conventional wisdom, especially if you're dealing with a sizable portfolio, is the efficient frontier. And I do believe that guaranteed fixed income instruments do play a very important role in that efficient frontier. And, people that aren't 30, 40-year market veterans, that kind of, I'm not going to say I'm normal. I'm very odd. Have you ever, any of you on YouTube, and I'd actually be curious just to give me some feedback here. Have any of you ever met anybody in your life who has banged out as many 100% banging out doubles trades as you have seen me do? I mean, I'm a weirdo. I mean, the number must be in the hundreds, if not thousands. But it's a gift that I have, and I just mine the shit out of it. Ironically enough, it's kind of funny, this whole concept, save for retirement. Well, why would I stop buying stocks that can double, triple, quadruple in value based on time-tested methodology once I hit like 65 or 70? I mean, my funny little tweet here that I have at the head of my Twitter feed, and keep in mind, I was coming out the backside of losing my wife and my son, our family being destroyed, and real lack of self-confidence. So in a weird sort of way, I came to crypto as kind of an escape from the real world. And I just did this fun little demonstration. Hey, there you go. There's $500 into $100,000, just doing this same principle. Why would this ever change? Why do I ever need to worry about money the rest of my life? So I'm a weirdo. Probably best, to be perfectly honest with you, even students, maybe don't emulate Brian. Brian's a weirdo. Just do the right thing. The right thing is the efficient frontier, being well diversified and not having, I watch, somebody was even saying the other, I was in, I think, the ladies' lounge I was mentioning. I watch like good 200-300 assets on a daily basis. I'll trade them. I mean, that's ridiculous. So I hope that helps speak to that. But honestly, I'm not really a big fan of investing in bonds and trying to take advantage of those higher yields, because I think the yields are going to go higher and higher and higher and higher. And I would say at the end of 35 years, which is a very long time from now, I probably won't be alive. But that's when I would be very interested in investing in bonds. And that's when interest rates will be very high. And you can get a really attractive yield. You know, like 1980, you could get like a 20, 30-year bond that would pay you 20% a year. I mean, why would you have to work? Why would you trade? Remember we said at 7.2%, your money doubles every 10 years. What rate does your money double at 20% return? That's like doubling every 2 or 3 years. So the point there is, in those kind of interest rates, all right, I'm interested. And if the 1% comes out and says we are officially declaring war on inflation, and we are going to put this rising interest rate market genie in a bottle, then I will get bond bullish. But like I said, I'm probably not going to be alive the next time we have that conversation. All right, next question. Please, can you explain this chart? All right, let's see what you got here. Actually, this is a good segue. How do you explain this chart? Well, level oneers, I really hope you get this message of fear, greed cycles, and the way generations move through their life cycle, and they have different spending behaviors based on where they are in their life cycle. This is a fact. It's not open for debate. It is a blatant fact. Does the Jupiter-Saturn cross affect human behavior to the extent, especially if you get like a Jupiter-Saturn cross or Saturn-Pluto cross, which all happened this year, does it affect human behavior to the degree that it actually drives that demographic cycle, i.e. baby booms? I think so. I think they're actually correlated. They're connected. But I also think, too, that we also go through funny little windows where they kind of disconnect. And I've been sort of cluing into this. And what I find interesting is the way humans act through those disconnection periods. So the first study here is my 17.5-year fear cycles, which usually are about 210 bars. I'm not quite sure why I have that as 216. So that's actually a little bit off. We should be a little bit closer here. So all of these should be the same number, 210 bars. And we just go through a period where, as a generation comes online, enters the workforce, their incomes go up. With the money, that opens up new spending opportunities. They do spend. They, go through a very normal life cycle of having children. So then that's more spending. It's directed spending. Then, as they're going through their lives, then the kids go off to college. Ironically enough, that's usually in a life cycle when you start hitting sort of your peak earnings years. The saving for retirement starts to ramp up in earnest. You start thinking about what's the other side of, the working life going to look like. Then you actually hit your retirement. And then you literally divest for the next 15, 20 years as you set yourself up to live the rest of your life in retirement. And it just goes back and forth, like I showed you the cycle from the Great Depression. And nothing really changes here. Everything moves in cycles. I mean, really, that's the simple message of all of this. It's just like Bitcoin. You can go and buy when a market is going straight up, and I don't know what the price is. But you have to understand the context of what's happening. What's the market state? And that's why I said right now, I absolutely hate this market state. It is a horrible market state. Everything's going parabolic straight up because the central bankers have guaranteed the market in this sort of health crisis environment. And as a result, here in North America, but probably now around the world, billions of people are all laser beam focused on, interestingly enough, one asset in particular is just got everybody's attention right now. And especially when I go on mainstream media and I see like literally every single day news headlines about Bitcoin on like Reuters and on Barron's and stuff. I mean, clearly this is a very unique, specific market state. How long this market state lasts? I don't know. How long until the Fed says, all right, enough is enough. This is getting ridiculous. I don't know. That's anybody's guess. And unfortunately, in this kind of environment, it's, exactly like Shane says here. One old-time banker, to try and stop one of these runaway markets back in the 1990s, had a very public speech where he told all of the people in the audience that you were irrationally exuberant. And the stock market fell like 5% the next day. What a surprise. So, you can either respect this message or, Brian, it's not really relevant in my life. It doesn't matter. My hunch is these cycles will just carry on doing what they do. I can see all the pieces put in place. The millennials are coming online. The baby boomers are slowly actually dying off now, and how ironic, this sickness and the related issues around this sickness are probably going to accelerate that trend. I often suggest to site students, think about the future. So, we've loaded up on a lot of like biotech and robotics and biorobotics because that we're thinking about what the hell the future is going to look like. And gee whiz, these stocks are all going apeshit here. So what a surprise. Thankfully, I suppose, thanks to JoJo, she got me to come into this crypto space. And we got a whole shitload of crypto on the books, that's for sure. And I couldn't believe it. The boys are actually like, we want more. I want to buy more. I don't think we have enough. We got to have more. And I'm like, come on, look at the numbers. This is ridiculous. We got plenty. And of course, if the market goes apeshit here through the summer, we're going to have plenty more. So if you can try and take advantage of this opportunity, it could be life-changing events. I would suggest going slowly, though. It's never a good idea to really risk more than 5% of whatever you're working with on any one idea, because you never know. It's Murphy's Law, right? Has any of you people over there on YouTube ever heard of Murphy's Law? Who can tell me what Murphy's Law is? And it's just the way life is. It sucks. And that, what'll end up happening here, I can pretty much guarantee you, is there's going to be a whole bunch of ordeal, real lot of fun. There's going to be tons of stories of guys just making ridiculous amounts of money. Then the market's going to break one day, whether it be some sort of scandal or whether it be a catalyst or a political event. I don't know what it's going to be. Everybody, kind of like what I walked you through with that Bitcoin and you saw in the gold, same thing. The market will go sideways for a bit and people will be like, okay, it's okay. And then the market will dump another 50% or so. And that's sort of the final move that sort of, kicks the hodlers, right? It's going to kick them in the nuts. And then we start the whole damn game all over again. Hey, thanks, Adam. One person knows Murphy's Law. That's scary. I mean, seriously, there's 150 people watching here. I mean, only one person knows Murphy's Law. I live my life by Murphy. Everything that I do, and trust me, I mean, I've been in hell. I've stared death in the face. So I live my life based on Murphy. Okay, back to this story. This actually should be a good image. Actually, you should feel positive when you see this image, because what this image is really saying is through respective growth cycles, growth grows. Now, unfortunately, in this kind of environment, we were actually doing sort of like above trendline growth and sort of upper channel growth. Growth was really strong. Then this respective cycle, so this is like your greed part of the cycle, and this is the part of the cycle called the fear part of the cycle, or in essence, this is investors simply walking away and reallocating, getting out of growth and going into like value, just simply extricating themselves from the market. And what's fascinating, like I find this really interesting, is that the peak of the dot-com boom, this is when all the university professors were laughing at Mr. Nortel Networks for selling. He sold and got out of equity. I mean, no offense, but, in 20 bloody years, equity didn't really do a hell of a lot. And you might argue, and I think this is exactly what's going on here, is that sell-off that you saw last fall did nothing more than it let the growth people who got out at the top of the growth cycle get right back in at exactly the same price. Remember Klaus, he wants to get you out of all of your assets through here, and you own nothing. So in essence, they just hit the reset button, right, through the transition window. Yeah, that's what I think happened here. So in essence, 20 years of our society were basically a zero-sum game. Nothing happened here in Canada, equity-wise. Now remember, equity is all about growth. If something's not going to grow, then why would you bother investing in equity? And interestingly enough, Canada is a funny country because it has sort of a mix of tech and sort of that growth story. Remember Nortel Networks right in here. At this point, that one company represented 35% of the entire Canadian equity market, because that was Canada's like ultimate growth proxy. If you ever see any one sector grow to more than 33% of the economy, that's how they define a bubble. This one stock was 35% of the Canadian equity market. That's ridiculous. And the university professors laughed at the fucking CEO of the company, laughed in his face, even though that was a blatant fact that this one company represented 35% of the entire Canadian stock market. Pathetic. Absolutely pathetic. So, I think from a growth perspective, keep in mind these are stocks, so they're growth proxies, and Canada's a mix. So as opposed to the United States, which is just primarily through the latter part of the commodity cycle, they forced themselves to go back into the commodity business. But for the longest time, it was actually just the United States is a growth proxy asset. And, .com, tech stocks, all that kind of stuff, they dominated. They were U.S. That was the U.S. economy. And I do remember actually in the mid-'90s, there was a popular TV show, and one of the characters inherited a fortune in the oil industry, and his big headline was, "I'm selling, getting out of this dirty, ugly oil business, and I'm going into tech." That was it back in the 90s. I remember that. That was the wave. So, United States kind of an interesting sort of mix. I think they've balanced it a little bit with things like fracking and the shale industry. So they're not so heavily one-sided. But Canada's an interesting story because, a lot of the Bitcoin ETFs, for example, they just listed another Bitcoin ETF in Canada. So unlike the US that's very reluctant to list Bitcoin ETFs, Canada's like, fucking hey man, let's go. Okay. And now they have two of them. Another one just got listed. So, I mean, now there's competition going for these ETFs in Canada. And they also said that Canada was the first country here recently to list a psychedelics ETF. So you can buy an exchange-traded fund on magic mushrooms. Woohoo! But this image in particular, I would consider this channel as your trend line growth. So if you ever hear bankers or government people talk about trend line growth, are we above trend line growth? Are we below trend line growth? You hear that a lot from these talking heads. They love using that. That's what this channel is, right? I might argue that this dotted line is our trend line growth. And moves above the dotted line would be above trend line growth, and moves below the dotted line would be below trend line growth. Moves exaggeratedly above or below the channel lines, I think, are buying and selling windows. And unfortunately in these, this was a selling window. When we get into this environment, very much like Bitcoin is right now, you can't talk sense to people. They don't know what the fuck value is. It's fucking moon, right? Go smoke a doobie with Snoop Dogg. We'll all get rich buying Doge. What's the value of it? One Doge? I don't know. Fucking smoke. You're asking too many questions. You have to have a bigger doobie in your mouth, sir. Does Snoop now that would be interesting. Remember I gave everybody I don't know what I did in the Broiler Chicken Show, but it was funny. I gave everybody a very specific mental image we're supposed to think about when we think about Snoop, Elon, and Gene. That might actually give new meaning to somebody smoking a doobie. Arr, arr, arr. Oh, that's terrible. Point here is, I think, like I said, if I can make Shane blush and go, oh, Brian, I can't believe you said that, then wow, I've gone overboard. Oh, it's funny. Hey, but in the nonsensical, stupid rhetoric, I actually gave you an incredible gem of economic information there. So I don't know whether anybody actually got that through all the nonsense. So this image, in my opinion, is basically what all the politicians are going to be looking at. It's actually what a lot of the central planners and bankers and stuff and central bankers are going to be looking at. Can we maintain long-term growth, long-term trend line growth? And unfortunately what I think happens here is we're not in that kind of environment, through the 1980s and especially into the dot-com boom. Politicians came out and said, hey, you know what? We don't have to run balanced budgets. Let's overspend. And we're in an environment that was conducive to that kind of thinking. It actually didn't make any sense if you think about it from an inflation-deflation perspective, but it made perfect sense if you think about it from a banker Fakese perspective. Anyway, point of the matter here is I think that's what then you would consider this like exaggerated above trend line growth. This is just a little too ridiculous. And of course, the market has to come back and check those levels. Conversely, when in through this period, we never even did get back to the bottom of the channel. But you can see here, this was the financial asset crisis. Ironically enough, that brought us back to the bottom of this channel. So I actually would argue that that was actually a fantastic buying window in there. And I remember I was a broker through this. We picked up some just fantastic stocks that within 6 months were like 5x, 10x, like big blue chip companies. This was a gift of a window. And to a certain degree, I think that's exactly what last March was as well. But what concerns me about this image is you notice that, on this bounce back, we get back to trendline growth, we check trendline growth, we come up against the top of the channel, and now that acts as resistance. Then we come back to trendline growth, and we try to move away from it. Now we actually M out off of trendline. Now we're back down playing with this. So clearly something has shifted in our economic thinking. We've gone from outperformance world, we moved through the fear cycle, and now we're in underperformance world. The problem here is that I do believe that they want to maintain the long-term growth. And remember, this is a log scale. If they can maintain this, that's more of that sort of Fakese kind of thing. We want a certain percentage annualized rate of return. We don't give a shit about the value of the underlying. We don't give a shit about how much a consumer has to pay for a loaf of bread at a grocery store. We would just want to make sure that every single year there is a positive percentage rate of return so that the balance sheets look correct. And of course, everybody makes their bonuses on that, and their wages are indexed to inflation, so they don't care about the rising loaf of bread because their wages go up at the same rate. Of course, Joe Sixpack, that's not so the case. Anyway, point of the matter here is on this dump, I think we came back to some interesting trend line support. You can't really see that on this chart. That's here nor there. But I think, like I said, what happened here was that basically they just hit the reset button. Anybody who got out through the growth cycle, they were given the opportunity to go grab your growth proxy assets. But going forward, I'm very leery about us being able to get above this line here. And in essence, you can see how this line intersects with our dotted line on our trend line growth. Like, I could very easily see them work the market back up against this line, but at that point, I'm getting very leery. We're bumping up against this trend line, against those highs, got midpoint, and then more importantly, and this is the problem with log, is that these numbers are not the same. So ironically enough, this growth rate, if through this growth cycle we just match this growth rate, that's actually this arrow. These numbers are the same, which sucks. Horse cocks. There's all this like Japanification, diluting the currency. Yes, they're going to get their percentage rates of return, but you can clearly see this growth is not going to be anywhere near this growth. And we hear a lot about that from people, like Talking Heads, Raoul Pawal, some of the other sort of people on the internet that are half decent to listen to. That, what do they say? You mortgage your future. You are borrowing from your children's future. Well, yeah, that's what these sons of bitches did, because some politician came to Washington and said, fuck it, let's just mortgage the shit out of our grandchildren's future. And so what? I want a bigger fucking missile. I want a bigger aircraft carrier. I want a bigger something else. So now we are the kids, we are the grandkids of Mr. Cowboy. And of course, ironically enough, historically, Mr. Cowboy actually is revered as a national hero. But I actually think that was that was like a total banker left hook. They brought him out of nowhere. They played him. And what's so funny is George Bush Sr. was Bush's vice president, and he gave Bush legitimacy in the Congress because Bush was a long-time congressman, and also CIA guy. We all know that story, and military guy and all that. The bankers got away with it. Hook, line, and sinker. Anyway, so we are now living in this mortgaged future. Here it is. Welcome to the 21st century. I think I told you back in this in this time right here, Actually, right through here. No, actually, it's way before. Let's say it's a previous cycle. Over here, I used to buy a bag of chips for 25 cents and a pop for 35 cents. Think I can get a bag of chips for 25 cents these days? So that's your mortgaged future. And we, Bitcoin, bazillion dollars, loaf of bread, whatever, Subway sandwich, blah, blah, blah. So my hunch is that we're not going to be able to get back to exceeding trendline growth. I think we will get back to trendline growth. But before we can actually even think about maybe exploring exceeding trendline growth and getting back into this kind of world, which would be above trendline growth, which I think we probably hit sometime through here, which is a long way away. That's like what? It's 2021. That's 14, 15 years from now. I think we're going to run up against some resistance here. And then we're going to have another one of these, 50% corrections. Because you can see we've consistently done this. Again, just like this, these are the same numbers. These are actually the same levels. And off of this high, coming up against trendline growth, that's that same number, which interestingly enough brings us back down against these trendline support, just like you saw in there. And that would also be another check of Klaus's buy-sell level. And you can see there's a whole bunch of key support down here. Clearly, this is an important level for Canada. My hunch is the bankers would actually want to defend the market if we do get down in here. But the problem is if we do that, then you're going to see that even our sort of below trendline growth is probably going to act as resistance. And we'll probably have to go sideways a bit and then see if we can punch up through and get back into this channel. So in the short term, market is still pointing up. And the interesting thing is, we're at 18,000 right now on the Canadian index, and this resistance line's 22. So that's still another 20, 30% higher they can take this stock market. And I think they will. But once we hit that level, I'd probably be thinking about pullbacks. And really, the point that I would make here is we at TRI, we have done exceedingly well over the past, I guess, basically 11 months. I mean, just insanely over the top. You're not supposed to make this kind of money from trading. So if you guys are thinking that that's going to continue on endlessly, it isn't. Can we continue to work our way up here a bit more here up against trendline resistance? Maybe. We'll see how it goes. But if you want to get back into that environment where you're making absolutely killer dough and it's just knocking cover off the ball, we actually have to wait for the next big dump event, whether it be 2008 financial crisis or this or whatever this event was or the dot-com boom unwinding. And then you'll get one of these opportunities where for like a year or so following, it's just like you can't do anything wrong. But I don't think that that's for a while. That's probably that kind of event maybe happens a few years from now. Right now, I think we probably work our way higher. We got, this summer silliness. Enjoy it while it lasts. We're probably coming to the end. There's lots of anecdotes that we're saying we're getting closer to the end than the beginning. Then we'll go through a topping up here. Then I think we have to go through, gotta clean things up. And the adults start talking about raising interest rates or whatever it is that they have to do to stop the insanity. Does the correction happen this deep? It will only happen this deep if we do roll over and go into another official recession. I don't know whether that actually happens or not. That's a tough one. Maybe if we're lucky, we can hold the bottom of this trend line, and that's as worse as it gets. But in essence, our direction over the next 15, 20 years is basically along this path. And what it pleases me here is, seeing the fear cycle. In essence, this is exactly what I would expect to happen out of growth rates or growth proxies. Basically, stock market has done nothing for 20 years. It's ready to start rock and rolling. The only problem here, like I said, is you can't really see the growth because the numbers are just getting so big. So on a relative basis, it looks still kind of small. So anyway, rant. The only other thing I would add to this is I threw on the Jupiter-Saturn crosses as sort of a backstop to that sort of generational thinking. One thing I don't like, and I don't quite understand it, is these Jupiter-Saturn crosses are not exactly the same. They actually oscillate, which is really freaky. I think it's because they're parabolas, not perfect circle orbits. Point here is that these things oscillate. And what I see happen, and I think this makes sense to me, is that we sort of go through the generational. You can kind of get an idea. I mean, when a guy's turned 65, 70 years old, is he going to go get another job or is he going to be thinking about retiring? I mean, come on. It's just simple common sense. But you never know exactly where the pivots in the market seem to occur. And what I noticed, I remember I studied this through 1980, same sort of thing. They officially called the bottom in the market in like March of 1982. I remember that specifically. And then, 17 and a half years later, that took us into the dot-com boom. So those are not bad reference points. And if you go back in time, they seem to correspond well with previous pivots. So that meant that 17 and a half years was around 2017, 2018. Remember that last Bitcoin run up and all the cryptocurrencies and all that. And I get a feeling that we were in sort of almost like a no man's land. We had to get through this Jupiter-Saturn cross to sort of set up the stage for the next cycle. So we'll see how it goes. I do feel as though the 1%, in a weird sort of way, like Mr. Trump, I think was a real run at the 1%. And in a weird sort of way, I think he did try to take a run at the system. And I think the 1% won. I think that event there, if we had rolled over and gone down and there had been a revolution and shit, maybe that would have been the end of growth for quite some time. This is a Canadian market, and definitely a Canadian market would definitely be affected by that. And also, too, if there was controversy around him coming back into office, like a coup or something, that might have been pretty problematic for growth going forward. But like I said, I think the 1%'s gotten away with this. And so as a result, the end result of all this is we're just going to have to add a zero to the end of everything. And the bankers win again. Yay! All right, so there's food for thought. I don't know who asked that question, but I was going to, Kevin and I kind of talked about maybe doing a blog post on this. I don't know, Kevin, do you think you got enough to write a few sentences on this image? It's definitely a mouthful. I don't know if Kevin's here or not. Anyway. Oh, yeah. All right. Well, he says cool. All right. All right. So I don't know who asked that question, but I hope I helped a little bit understanding that. Hello, Brian. Could you please explain a bit about how the Fed stress tests were done and its impact on the market fluctuations? I'm not, and I suppose you have a nice little article here, link, and I think they said that the banks passed. Really what they're worried about is at any given point in time, remember our little goldsmith kind of analogy? You can make the argument that the gold bank, the bankers nowadays are the same as those goldsmiths. So the way the system's set up right now is the central planners, through this thing called the Federal Reserve Board, they incentivize the banks to go out and lend and be that goldsmith guy. But there's nobody really keeping an eye, especially like 100 years ago, there's nobody really keeping an eye on the banks themselves to really sort of monitor how much gold do you have versus how much paper you're lending out. Or, the gold-backed notes that you're passing around, people are using as currency to buy their loaves of bread. So it's really just a question of, how thin are the banks cutting the margins. And On balance, of course, the banks would love to cut the margins as thin as possible to maximize profits, right? Remember we said the banks, the only thing they care about is at the end of the year, what is the percentage rate of return on assets? They don't care about what the underlying value of the assets are. All of their bonuses, dividend payouts, everything is based on percentage rate of return, which has nothing, that's the log scale, has nothing to do with value. So, and actually the divided by M2 scale, we should probably call it that. I don't know the particulars of the test, but usually the way these things go is they simply say, what do you have on your balance sheet? And it might be like, Joe Smith has got a mortgage on my balance sheet. Joe Smith, so that's a liability for the bank. Joe Smith has X amount of dollars deposited at the bank, and so as a result of those deposits, we lend out against that collateral, and it might be like a 10-to-1 ratio. So Joe Smith has $100,000 on deposit at the bank, so the banker goes out, lends out $1 million using Joe Smith's deposit as collateral. The question is, what happens to Betty, who took out the mortgage? What happens if those real estate prices collapse? What happens if Joe Smith comes into the bank and says, you know what, I want my $100,000, so please give it to me in crisp $5 bills. So these are the kind of questions that these Fed stress tests do. And it's just really a question of just trying to figure out how over leveraged these financial institutions are, because a lot of loans are based on the value of something else. So I was telling Andrew last night about Tyco International, which was a funny little company a guy started up in his garage through that growth cycle. And they went on, they bought a whole bunch of different companies. They shilled the story to Wall Street, and the stock went up and up and up and up and up and up all the way to the moon. And he financed a very lavish lifestyle just simply by taking loans out against his equity in Tyco, like to the tune of hundreds of millions of dollars. Then all of a sudden the dot-com bull market ended and Tyco stock started to go down. And unfortunately, in those kind of scenarios, when equity valuations, stock market, housing market, when they start to go down in value, then the banker says, well, you put up your Tyco stock as collateral to secure the loan. Now it doesn't meet that collateral minimum anymore because the price of the stock has gone down. And the whole thing starts to unwind. So these kind of stress tests are just to ask, okay, if the S&P 500 loses 50% of its value tomorrow, what is that going to do to your balance sheet? What do your assets look like? What do your liabilities look like? Are you going to be able to open your doors and let Joe Smith come in and withdraw his $100,000 that he doesn't want to have in the bank anymore? If you can't pass that stress test, then the sort of central planners go, we got a problem. Because we don't really want to have a run on the banks where the public just has no confidence in the banks surviving. Now, it's kind of interesting in this particular environment, the banks and the financial services institutions, they're in really good positions. They've actually spent like 20, 30 years. Remember I showed you that equity chart. So they've actually spent 20, 30 years of equity valuations just going down, 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 down. They are no longer frothy. The banks themselves are actually trading. Their stock themselves are trading at relative value levels. So, on top of that, through the 2000, George Bush Jr. years, the financial services industry got itself into real hot water by just lending out way too much money. Not having enough collateral, Joe Smith's deposits at the bank, to secure all those loans. They were in really bad shape. And quite literally, if somebody had come along and said, Betty, I'm just going to dump your bonds into the open marketplace. Hey, if nobody wants to buy them, then I'll take an entire tax loss. But I'm sure somebody will want to buy them at like 5 cents on the dollar. That's what I think would have happened to the United States of America. The government paper had this central entity come along and just simply said, no, you know what? We'll take those bonds. And we'll give you cash in return. And, of course, the bondholder goes, fucking cash? All right, score. And I think that's exactly what China did. In 2008, I think that they trusted the Americans that the paper that they were buying for all the work that their slaves did was worth something. But it turns out it was worthless. And I think the Chinese were pretty damn pissed off. And I think the Chinese told the Americans, look, you either take this paper off our hands today, or we're just selling it into the open marketplace and we're going to drive your country into bankruptcy. I literally think it was that close. And I remember Ben Bernanke testifying in front of Congress, quantitative easing, blah, blah, blah. Talk, as a broker, we used to always say, if they stop taking the bullshit, switch to the chicken shit. If they stop taking the chicken shit, switch to the horse shit. If they stop taking the horse shit, switch to the pig shit. And I think Bernanke just sat there and just, okay, well, what bullshit can I come up with that these people are going to buy that we are going to instantly take all of these bad bonds off of the Chinese books? That's what I think happened. They spin it as quantitative easing. Ooh, that's fancy term. Talk about now. That's some good A quality bullshit. They really worked hard to come up with that one. But that's basically what I think's happened here. And what's so funny, right, is that the market's bought it hook, line, and sinker. But every time somebody gets a little bit wet feet, in come the sellers, and they drive the market down. There is just so many bad bonds sitting over top this market that if the Fed doesn't keep buying all of this bad debt, then the U.S. is fucked. And really, I wouldn't say just the U.S., I would say the entire Western civilization. This civilization has run its course. I was joking earlier, and, this often happens with civilizations, is that they usually peak around sort of millennial events. I think you could make the argument that the Roman Empire peaked right around Augustus. Some might argue 100 years later or so, but I think you could make the argument there was a serious sort of trough around 1000, and we started to climb our way out following the Dark Ages. I think you could make the argument we made a peak here with blowjobs in the White House. I still remember her pretty smile, so proud, so happy to introduce her family to the big guy himself. She had such a beaming smile. And now we know why. She brushed her teeth with nature's toothpaste. So, ironically enough, I kind of feel like... you like that one? I pulled that one out of the air. Sometimes these jokes land great. Sometimes it's like, oh man, that's bad. Nature's toothbrush. No. Oh, did I say nature? Oh, well, same thing. I was going to say nature's toothpaste. Out of your butt. That's one way. Yeah, no doubt. She had pretty good skin too, right? So, good complexion. Well, whatever you think of toothpaste, and oh no, okay, let's just leave it at that. Okay, so to answer your question, believe it or not, actually, I think a lot of this is phony baloney. It's the banks right now are in an extremely powerful position because through quantitative easing, they got all of those bad bonds off of their balance sheets. And of course, with all this new stimmy funding by the U.S. federal government, the Fed quickly goes up and grabs all those new bonds. And of course, remember, reserve requirement. That means that they can lend out many multiples of that. What is this? Like, I think it was like 700 billion or something like that was earmarked for Federal Reserve support. What did they call them? They had like the emergency lending programs and all that nonsense, right? I mean, again, baffle them with bullshit. Just, try and come up with fancy terms that just gloss over, hey, we're just taking these bad bonds that nobody wants, and if they sell them in the marketplace, it's just going to absolutely collapse the economy, and we're just going to put them over there. And what ends up happening now is the bankers are like, look it, we can't keep putting them over there and forgetting about them. So, because the U.S. government continues more deficit spending. I mean, to the tune of trillions of dollars. This is insane. So, what's going on here? And I think what the bankers are doing and why we're going to see this hyperinflation here, especially in things like food prices, that's where it really hits home hard. I think the bankers are simply turning around and taking the old bonds that are maturing and the quantitative easing bonds, and they're just literally turning them into cash and then flooding the market with cash. Quantitative easing. In essence, it's what, you've also heard the term monetizing the debt. So I think that's what's going on here. And I actually think a lot of this is just fluff, which is sad. And they're going to come out and they're going to say, yes, most of the banks meet the stress test. It's all 2 thumbs up. Well, they already knew that. But, this is great fodder. Like, I hate to say it. I kind of believe that a lot of this COVID and stuff, it just stinks. Like, it's just too many coincidences. But anyway, I just said the magic word. Let's see if YouTube shits on me. All right, moving on. Hey, Brian, could you walk us through your process of screening for trading ideas? Could you hint me into a good direction for designing a practicable, fundamental screening process for day-by-day usage? Well, I mean, that's kind of what the whole damn course is about. Yeah, I got to get going here, too. Holy shit, it's already 10 to 2. Yeah, that's probably a little too big of a question for something like this. What I would suggest you do is create a fundamentally screened list of ideas that happen to perk your interest. If they're in the crypto space, wonderful. If they're in the stock space, wonderful. Come up with your criteria that identifies value for you. And then build a watch list, and then you're just going to simply apply the technical setups that we teach on the site and in the course and stuff. You're just going to apply those setups to those trade ideas. If they're bullish trade ideas, you're going to apply bullish setups. If they're bearish trade ideas, you're going to apply bearish trade setups. There's, many different products that I trade. So, it all depends on if it's a cryptocurrency or, if it's a futures contract or if it's a commodity, a currency, warrants, stocks, options. I mean, there's a gazillion different products I trade. But the simple process is all that kind of stuff is all vetted in your trading plan. So all that stuff is defined in, your tactical approach. I trade Bitcoin on Coinbase. Okay. I have X amount of dollars in my account. I am this type of risk taker, so that means I put this amount of money into each trade, and this is my risk management strategy. All that shit's already predetermined. So day to day, really all I do is I just every single day. I mean, the great part about things like TRI Club is that we have this community of stock pickers, and these fucking people are killer stock pickers. Here's two names Jamie wanted me to buy. Jamie goes, hey, Brian, I got a stock I want you to buy. And he told us here. I mean, look at that. Bastards. And the worst part about it is this guy has a warrant, and the warrant's going absolutely nuts. It's just, ay, caramba. This, I think, is his warrant. Look at that. It was $1.75 when he told us. Nice inside bar off of the bottom, and look at it. At $8. Jesus H. Christ. So, I go to these. Did I actually cause Kevin to swear? Holy moly. So, I've told you guys half of the reason why I put this site together is to build a community of educated, well-trained traders, and I literally mine them. Everybody should look at this at the very least and go, well, I think there's... I went to this website because this guy on YouTube was like, www by the swearword.com. I mean, I don't know whether you can see that, but that's about as as W's get. I mean, you want to make money from trading. I mean, fuck that. That's the shit, man. It's just right there. Just take a screenshot of that for fuck's sakes. So what I do is I mine the community. You can see this is a pretty damn robust list, and this is just my shopping list. So I'll just sit here and I'll go through the ideas, and if I see, El Tangonators, bots, in fact, here's a great one that I did just recently in the airline sector. That was a beautiful trade. Everything that I teach at TRI is right here on this image. And what the hell? It's nice 7-to-1 risk reward. Not bad. Am I upset that it's still moving on here? No, I couldn't give a fuck. What I care about is I said I was going to enter here and I was going to take profits here, and I did what I said I was going to do. Account balance goes up. Merry Christmas. Come again. So, I mean, in essence, that's what I do. That's my process. I'm just constantly hunting for... I mean, is there a letter of the alphabet that maybe can kind of give you away what I'd look for on a daily basis if I was thinking about buying something? Actually over in crypto, there was one doing it right now. I couldn't believe it. I looked at the chart. In fact, I was putting a bunch of tweets out to this effect. I mean, there's some of these names that are just staring you in the face. I mean, do you buy W's? The funny thing is when these things W, nobody wants to buy them. It drives you crazy. But, that's capitalism. That's the way this stupid game works. So this Mona here, for example, I mean, this is no-brainer shit. Remember, I'm not telling you what to buy. I couldn't give a fuck what you buy. I make enough money trading my own money. I don't need your money. But I mean, it just doesn't get much easier than this, folks. I mean, it's at the bottom end of the range. Making things that kind of look like www.buythefuckingmountain.com. I mean, there it is. If you see this thing up here, don't be surprised. It's so common sense. And the worst part about this is it's like, if I went out to downtown, well, I don't know, downtown anywhere, and I said, oh my God, I bet this is screaming, but I bet you most people are going, not interested. I want to buy Bitcoin. I want to buy this thing that's fucking mining, man. This is what I want to buy. I want to buy this. I want to buy this. Oh, you gotta be kidding me. Can't you see the same damn image? I mean, it's just ridiculous. It drives you nuts. So, you could go buy Bitcoin if you want to, but that's not something I would buy to make money from trading. It's crazy. But hey, I mean, yes. And that's also, too, something that I'm getting a little pissed off about. Is people take this shit like it's literally like fighting words. Which one? I mean, here's another one. Look at this goddamn one. Do we know who this guy is? Anybody ever heard of this guy? I mean, look at this chart. I mean, hell, look at it. But that's probably not real. Even if we just head up against these highs here. I mean, it's just sitting there. That's a big fucking W if I've ever seen one. Of course, I'm long from down here, so, try not to chase. But if I went out and tried to pitch people to buy this, it would be like fucking pulling teeth. So I don't tell people what to buy and sell. I don't care what you buy and sell. And frankly speaking, I make pretty good money trading. I don't need to worry about, newsletters, YouTube video feeds, and, selling Tide laundry detergent. Fuck bitch, bitch, fuck slut. I don't care. Anyway, now Brian's just getting stupid. Okay, I gotta fucking get out of here for Liam, man. This is ridiculous. Okay, last question. So hopefully I gave you some stuff to think about there. When drawing fib retracements on the SPX weekly, which pivot low do we use? 09? March 20? Is there a good rule of thumb to keep in mind when we're working off of the relevant fib ranges? Yeah. Always open debate. Unfortunately, what you're going to find as a trader is half of this is actually trying to figure out what works for you individually versus what the other guy is doing. You start following what the other guy is doing and asking, okay, well, maybe what I'm doing is wrong, and maybe I should consider what he's doing. You're not ready yet. You're just not ready. And that's fine. I mean, if it takes you 5-10 years to get ready, okay, well, fine. It's going to take you that long. Something like drawing fibs is really, it's more of an art form than a science. And can you possibly imagine how many fib studies I have drawn in my 30 years playing this game? Can you possibly imagine? I can't imagine. It must be in the tens of thousands, if not more. So what you're probably going to find is that after you do this a while, certain things are going to kind of jump out at you. It's not really like one idea is righter or wronger. Really what you're looking for is that magic confluence where actually you get a whole bunch of things that are all saying, hey, you know what, you should probably pay attention on this level. In the level 1 program, the first concept, and really what I want you thinking about when you draw your fib retracements, is that institutional fingerprint concept. So you notice I drew a fib off of this entire range just going back to last March, and you'll notice something jumps out at us. Our first stop target, 38.2, just so happens to line up with exactly the level that the institutions last go round said, stop going down, you go up. Also, and this will be more sort of level 2 kind of conversation if you do decide to move on, you're going to also see things like horizontal support and resistance, or in essence, this is actually turned into quite an important battle level over time. So there's a lot of market participants that are taking positions and squaring up positions off of this level. Notice how 38.2 off of this entire range happens to align with that. So now I've got institutional fingerprints, 38.2, and horizontal support and resistance, all validating that, hey, that's a pretty darn important level. But you also notice on this chart too, well, also too, just in the short term, we've got this little range, where we made a low there back at the end of January, and you also notice against these lows, this low. This is also a perfectly valid fib study off of a very small range. Notice there's a gap in here, so, as traders, obviously that level is hugely important. Just that comment I made there a moment ago about institutional fingerprints. The market was heading down here. Somebody said, no, you head up. So clearly there's some vested interest in this level, and gee whiz, there's your reload zone. So the idea here ultimately with the trade location concept is we would like to see confluence. We'd like to see a number of studies all suggest that, hey, you know, this looks like a pretty important area on the price charts. Let's keep an eye out and just watch how price behaves through here. You might get a nice little W that gives you a nice little trade. Ultimately, what I'd love to see out of the level 1 program is, let's say hypothetically, price does something like this, then rallies back up, and then starts to waver. And hopefully you're thinking one setup that Brian kind of likes to trade. And what I want you thinking, regardless of whether you take the bot or not, what I want you thinking is that confluence idea. Because usually this is the way corrections go. In that we're going to draw a range. Then we're going to postulate things like A, B, C, D, extensions to take us down into, so there's 144.5 midpoint, right? Just as 70.2 is the midpoint of this sweet zone, of this reload zone, the sweet spot, right there. You can make the argument 144.5 works very similar to that. You notice A, B, C, D takes us down into that 145, right? This is, when it comes to extensions, I'm a big fan of this window here, 127 to 1.618. I like to follow 200%, but this is not a fib. This is Brian's, you know, and review the lecture material, head and shoulders, that market structure, market symmetry kind of thinking. So what I want you thinking, though, is like A, B, C, D, and of course this is Brian's bot setup. All right, so boom, 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 boom. And maybe I'm going to take a short trade off of that, and I'm going to, oops, going to draw the study correctly. That's what I'm going to try and do. Right, I'm going to try and enter. Actually, I'm getting good at drawing those levels, eh? So I'm going to try and enter off of 25, 3-to-1 risk reward, take profits here. But also, too, notice, gee whiz, there's a big gap. So this is reload zone. Maybe I'm going to take profits here, and then if we get nice little buy setup coming in here, maybe off a divergence or something, I'm actually going to look to try and go long. So I'm going short as a badass trader, trading down, and then I'm going to go long as a badass trader going up. You know, whether you get to the point of being able to trade bots, you know, we'll see how it goes. I would really like for you to understand that extension concept into reload zone as a really, really great tool to help you see trade location. Right, that kind of thinking. That's overlapping zones, harmonic PRZ zone, which you'll learn later on. But when these ABCDs align with things like reload zones, that sets up a fantastic trade location. But you'll notice what I did here. I'm just looking over the past, I don't know, what is this? This is the past 4 months. And look at all the different fib studies I'm doing and coming up with levels. Really, it's a question of you got to put a lot of miles under your tires, on your tires. You got to get to the point where you're looking for that confluence idea. And if you are working off a higher time frame charts, just understand those are going to be more important longer term historic levels. You know, investors probably best to work off of higher time frame charts. Clearly something like a bot like that, that's a trader's trade. Investors, I would almost consider this like a swing trade, maybe kind of pivot that happens in here, this level here. And then, you know, like long-term investors, the irony of it all, like if we come down here and we lose the first stop, and I would actually argue investors ought to pay close attention to reload zones down here. And we might actually, because this is what I think is going to happen, is we basically just went 1 year straight up, and now we're going to go 1 year straight down. I mean, I joked with somebody earlier. I wouldn't be surprised if Bitcoin's trading at $3,000-$4,000 in a year or two. It wouldn't surprise me one bit. But anyway, that's a conversation that I'm sure you all do not want to have. I suppose what would prevent this from happening, complete unwind, is more burr. And I get the impression that they're trying to get the burr machine going. So, fingers crossed. We hit that 1 year. We just go sideways. The burr machine kicks in. And they just keep taking the market higher, and your Bitcoin's $1 million. But point I would make here, if this actually played out to my expectation, notice there are some price gaps down here. This is all Swiss cheese. So at some point down the road, we will have to trade back down here. That level there, that level there, that level there. So again, think confluence. So now we've got our reload zones identified. Notice that gap lines up with Mountain Man really well. This gap lines up with 78.6 really well. And this would be like Kevin Kavarkanator's Bitcoin trade from last year, where he nailed his 88.6 and owned it like a boss. So these are levels, still working off a daily chart. I mean, you want to go back all the way to 2008? Okay, I mean, there's nothing wrong with that. I just don't know how realistic move all the way down here is. And I would actually suggest that you try and limit your fib studies to things like 52-week ranges. Like W.D. Gann would say that there's a very high probability that a market will retrace 50% of its previous move over 50% of the previous range as time. But also, too, Gann was a huge fan of calendar years as markers, and he would say that a market will typically move for 1 year and then do a 1-for-1 time for price 50% of 1 year to correct whatever the move was. So I find it hard to believe that we're going to go through these floors. I find it very hard to believe. But, hey, anything can happen in this crazy world. I don't know if I would actually feel comfortable doing a weekly fib study off of this and expecting these levels to be hit tomorrow. In essence, this is off of your financial asset crisis low. As I said, usually stock markets like to lose 50% of their value through recessions. So 50% haircut would take us somewhere into. Actually, that's interesting. So 50%'s there. Suppose. This peak isn't really accurate, is it? There we go. Still, how does that work? Oh, something's not right there. Is this log scale? No, it's regular. Okay, I'm not quite sure why 61%. Oh, this is the whole price. That's why. Okay, actually, this makes sense. I like this thinking. So usually, and actually maybe this makes sense too, right? I remember we showed you that TSE chart. Kind of looks like we got a megaphone here. Not quite sure if this is valid or not. 50% haircut, usually that's the barometer that you use. Like if you go back and look at George Bush's recession, Obama's recession, right? They all had 50% haircuts. So usually that's what you should expect. Interesting how that aligns nicely with Mountain Man, and again, sort of what we were talking about there a moment ago, horizontal support and resistance. In level 2, we would call this tricking out your charts, where you just want to load up, and clearly you can see cluster of support. That's going to be an important support level if the market does collapse here. So that's not a bad level to think about. And really, believe it or not, actually, that's not totally out of the question, because I think what ends up happening here, here's the problem. Most people don't realize this. The whole housing market in the States is predicated on low interest rates. Well, what happens if you don't have low interest rates? Imagine that. What would happen? I don't mean to be rude, folks, but interest rates are nowhere near where they were through that financial crisis last year when the Fed was just giving away money. This picture has changed. Now, this is going to be predicated if the Fed comes out and says, and prints more money and guarantees the market. Okay, fine. Well, then maybe this thing cranks back up. But that image is not bullish. Remember, somebody was asking, would you buy bonds? I would not touch that chart with a 10-foot pole. And really, when bonds will be a buy again? They'll be a buy, in my opinion, when the market W's on the other side of this trend line. And that might be a very, very long time into the future. I mean, I don't think it'll get that bad, but probably maybe like over here. There is no reason for me to be bullish of bonds whatsoever. Now, the problem here, of course, is, the market has fallen a lot. Mr. Bond King, oh boy, he's just taking it on the nose here. But I wouldn't be surprised at some point, we say wicks and tails like to be eaten. You can see how this is kilos, look left. I think I heard somebody say earlier that's a great way to think about the market. But, if you did something like boobity-boo and you took our course and reload zones are your focus, do you see how we're starting to get a bit of confluence down here? We have the reload zone. Kaboom! And now we're blowing through 78.6. You often hear me say markets like to come down, do that, and then down the road I'll look back and go, son of a bitch, bottom right off 78.6. See that all the time. But reload zones. Wicks and tails like to be eaten. That's one big honking wick, or tail, beg your pardon. Something about gaps. How often do gaps like to be filled in? I wonder if you people on YouTube even know this. So there's that. I would actually argue is still an open gap. Oh, not anymore. Actually, that gap's been filled in now. So there's still one more gap down here. And I mean, heaven forbid we lose these lows. Hey, look at all these gaps. Hey. But let's assume, just for assumption's sake, that we actually do see. So, this would be like the Fed coming in and saying, oh, no, we're going to guarantee the bond market. And notice that that's right around the time when I actually think the stock market's going to top. Things like cryptocurrencies and stuff top. And we actually probably have a nice little counter trend rally right back up to that trend line. That's what I think's going to happen here. But people in the stock market are already looking over at this and going, Houston, we have a problem. Interest rates are not trending down anymore. Interest rates are trending up. And really, ultimately, this is what I think sort of unwinds whatever sort of fluffy bull market we're in right now. Okay, I think I'm going to leave the rant at that. I think I answered all the questions. Yeah, okay, so hopefully that helps answer that. Good question. And really the bottom line here is I expect, if you're really serious about becoming a trader, I expect you to be here at TRI for like the next year. And by the end of that year, you're going to have drawn so many damn trend lines, you're not even going to know what hit you. You're going to draw so many fibs, you're not going to know what hit you. You're going to see so many gaps, you're not going to know what hit you. But ultimately, you're going to start to get a feel for that confluence idea. And hey, we're coming into a level that I really should pay attention to. It's going to take practice. It's going to take a lot of practice. It's going to take time. To get really good at this. So my hunch is you put the time and effort in. You give me a solid year of effort to just don't quit every day. By the end of this year, you will understand exactly what appeals to you and what works for you, and the sky's the limit once you're at that point. So I hope that helps answer that question. The answer to that question is we got to put some miles in your tires to actually see what levels work best for you and what you're comfortable with. And really all the levels that I pointed out on the chart, they're all perfectly valid. Yeah. Okay, I think I'm going to leave it at that. I got to head off to the boy, go get some KFC for him. He loves his KFC popcorn chicken. Be sure to follow the new Twitter feed. I think it gives you probably a little crisper feed and a lot less political nonsense from Brian. Try to have a good time in the market. Try and buy W's. I've shown you a couple ideas today that I'm buying that are Wing. They're not very sexy. They're not high flyers. This kind of space up here, this kind of stuff gives me vertigo. If I see a chart that looks like that, I get really scared. So be careful. It's your money. You worked really hard for it. These guys, of course, that run these exchanges and stuff, really all they want to do is just take your money. They don't really care about you as a person. So try not to get sucked into chasing FOMO. Oh, Jesus. Hey, there goes I don't even know what to do here. This is exactly me. I forced myself to come in at the bottom end of the range. I've sold half on a double. I've got a risk-free trade. Now what do? I have no risk. They're free coins. You want to see something funny? I put out a tweet saying, you know what? Maybe I'm just going to let some go up at these crazy-ass levels just for fun. See what the hell you guys got in store for me. But get yourself into that risk-free trade. Once you do that, sell half on a double and banging out doubles, whatever the fuck you want to call it. Once you're in that position, you are so made in the shade, it doesn't matter what happens afterward. Let's see where the hell this is going to take us. Here we go. I'm going to come out with a price target. I say that steak will trade at, what the hell is that? This is US dollars? $328 a coin. There you go. I've made the call. Whatever the fuck that means. What I will simply say, though, is for God's sakes, don't come in and buy this here, you knuckleheads. Go visit that website and just buy the W. This is where you're supposed to be a buyer, not here. So, anyway. Okay. I don't know if there's anything else. Like I said, I actually gave you 2 ideas today, totally free of charge. So there you go. Chew on them if you want. I think I'll leave it at that. Have yourselves a great rest of your day. Wish me luck with Liam. I love seeing your best wishes for Liam because you never know with Liam. From one day to the next, you have no idea what to expect. So please, everybody, give me a big good luck, Brian. Let's hope we have no holes in the walls by the end of this. And now Liam's taken to throwing his ball as hard as he can right at this television. I think he's determined to try and break the glass. It never ends. All right, guys. All the best. Sure hope you got some value out of that. And you really are enjoying your time at TRI. And have made some sort of positive difference in your life. Because, guys, at the end of the day, that's all that matters. All right. All the best. And bye for now.